Mildly interesting. Global COVID deaths pass 1.8 million and continue to climb. UK lawmakers cut it fine, as is the norm for Brexit issues. The trade deal passes 24 hours before the end of the transition period. But a bigger lockdown in England, Boris Johnson imposes tighter restrictions on most of the country, warning of extremely tough months ahead. As a result, we had FTSE futures down more than 1% leading into the open. Let's pull up the global macro movers screen and see where the FTSE actually trades in the early minutes of the session. You can see the IBEX down more right now, 0.5% on the left-hand column of your screen there. The FTSE down about 0.5% as well. And keep in mind, you won't get Deutsche Börse indexes open today. You do see the Euronext issues trading, but even they will close early for the holiday. So you're not going to see the DAX here, but you do see the CAC opening down 0.5%. The FTSE now moving down 1.25%. And it looks like there is real concern about that increased lockdown that Boris Johnson announced last night. So we'll continue to follow these indexes for you, but moving down a bigger drop in London than we see throughout the continent in those indexes that are open. Having said that, the pound is up. 136.51 is the cable rate right now, and that doesn't help FTSE issues either. So the dollar hitting as well a 2.5 year low on the last day of the year, and that's one of the reasons that the pound goes higher. Joining us now is Alan Higgins, the CIO at Coutts. Alan, usually we get an inverse relationship. When the pound goes higher, FTSE lower, and vice versa. Does that make sense to you as the norm? Is that what we're seeing today? Or is this really concern about the extended lockdown?
Yeah, morning, Matt. You're right, this is the norm. We do have somewhat of an inverse relationship. However, I mean, the lockdown that we're experiencing here, we call it a lockdown, it's pretty similar to what we're seeing in Europe, probably pretty similar to what you're seeing in Germany. So, look, the other factor is, I don't know if you had a look, but the UK, this quarter, the UK has actually been the standout market. It's been the real outperformer, especially the 250, actually, the 250 stocks after the FTSE 100. But even the 100 has been a good performer. So a bit of profit taking, a bit of panic, maybe a bit of fast money. But yeah, you're right. You do get this inverse relationship. But this is a bit extreme because sterling's only up a nudge against the dollar this morning.
What are your thoughts on the Brexit deal that was the trade deal that was approved late last night? How is that going to affect the UK economy in the early months of 2021?
Well, it's better than no deal, I guess. But, you know, for us in services, there's still a lot of work to be done. So we're still going to be talking about Brexit type issues next year. I guess what it will do, it will increase confidence in the UK, and especially with the valuations of a lot of UK corporate of the UK corporate sector, maybe some M&A. We know that private equity is awash with cash, for example. Sterling's cheap in our view and in many people's view, or even academically based on purchasing power parity or inflation adjusted exchange rates. So yeah, I think there'll be a bit more confidence in the UK, and therefore UK assets, having been a real underperformer this year, can have its time in the sun next year.
You are, I believe, Coots's banker to the Queen. You've got enough domestic business probably not to worry about it. But how do you expect the rest of the city will cope without passporting rights and other equivalency issues?
So, Matt, the only comment I say on that is that that's a matter of public record. That's the official comment on that statement. Yes, the passporting, the so-called equivalence, there's a lot of work to be done, and it's quite important that the UK has goodwill with our European neighbours to try and get this through. And it's going to be a bit of a struggle because, obviously, if you sit where you are in Berlin, or if you're in Paris, you want the other side of that business. So it's going to be a bit of a struggle. However, I do have faith, definitively, as a UK as a financial centre, despite potentially losing some rights to cover European companies or European personal clients, for example.
Where do you see this going? I mean, until now, London has been really the financial capital of the world. That's difficult for people in New York to believe, but I think it's true. Does that stay the case through 2021 and beyond, or is that changing?
It's hard to know definitively, isn't it, Matt? It's really hard to know, and you probably have a pretty good angle from there in Berlin. What I would say is that when I talk to a lot of actually people from France, from Germany, who have businesses here, they very much like, of course, the language, the infrastructure, the legal system, and therefore, if, for example, in asset management, expect that to be absolutely core in the UK. It's very, very difficult, for example, for our European neighbours to insist that asset management is done only in the Eurozone. For trading, I think that will remain strong. Where it's tough, for example, for clients from the UK to come and see Daimler-Benz or to come and see a German personal client, that was always challenging on the personal private client side anyway, to be clear, even inside the EU. That is going to be more challenging, and there's going to be a lot of negotiation about that. But I have a lot of confidence that there's enough in the UK in terms of the financial centre to be still, if not the leading financial centre, because obviously New York will also gain somewhat, a very strong financial centre indeed.
You look at the indexes, and New York continues to hit new records. Even Frankfurt and the DAX managed to hit a new record this year, but the FTSE is still down 15% year to date. Does that recover in 2021, do you think, Alan, or is Brexit a bigger problem for FTSE stocks than we may once have thought?
Yeah, I should say, Coots are global investors. I know we're a UK private bank, so we do invest globally. But on the UK, I mean, really, as you know, Matt, this is all down to this huge divergence we've seen between growth and quality type equities versus value. And the fact is the FTSE 100 is full of value. And therefore, it's no surprise. It's much less to do about Brexit than it is to do with this huge divergence, which we've seen, by the way, in the United States between value and growth. From our perspective, we think I was on, good timing. You've got to be lucky. A couple of months ago, and I said this rotation has legs. And for example, we have a position in US banks, which has already started to perform. And therefore, if you believe this rotation has legs, why? Well, when you have an economic recovery, that's the time to be in cyclical stocks. 2, obviously, they're very, very cheap. 3, there's almost very little active money in value stocks right now, value cyclical stocks. There's been, all the money's gone into global equities, especially growth orientated or US equities. So I think there's good reasons to see that why this rotation has legs. and therefore, but if you extend that, therefore the UK, you should expect to continue what we've seen in Q4 to be an outperforming market, because it is a value market.
Yeah, you're absolutely right. In fact, you look at the FTSE, Alan, and the biggest holdings, the biggest weightings, I should say, are companies like Unilever, AstraZeneca, HSBC. You've got to go 25 positions down before you get to anything even remotely tech related, and that is only Vodafone, so still a telecom. Alan, you're going to stay with us. We're going to talk more with you about, you mentioned the U.S. bank position that you hold. We're going to talk about what's going on in America in terms of new records there and possibly the rotation that's going on as well. Up next, a second U.S. case of the highly transmissible COVID-19 variant has been detected in California as well. They are having a difficult time of it when it comes to the pandemic. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open, 12 minutes into the shrunken session. Fewer equity indexes are trading today because of the New Year's Eve holiday, but of those that are, the FTSE is down 1.3%. Let's get the Bloomberg Business Flash. Here are today's top corporate stories from the Bloomberg terminal. China is probing the equity investments held by Ant Group in several companies. That's according to Reuters, citing 3 unidentified sources. Regulators are considering asking Ant to divest some of its stakes, mainly in tech and fintech startups. Reuters says that's possible. That's because of possible unfair market competition. No official word yet from the Ant Group itself. Bitcoin hit another record this morning, topping $29,000, and its advance shows no signs of slowing down. It's now rallied almost 50% in the month of December alone. That puts it on track for its biggest monthly gain in 18 months. Bitcoin's value has now quadrupled this year. It's only its 10th year of existence, really. Zhang Shashan has overtaken Mukesh Ambani as Asia's richest man. The highly private billionaire has seen his wealth soar by more than $70 billion this year alone. He is little known outside of China, but has had a career spanning journalism, mushroom farming, and healthcare. He is best known as founder of the bottled water maker Nongfu Spring. And that is your Bloomberg Business Flash. A second U.S. case of the highly transmissible COVID-19 variant has been detected in California, and that's a day after Colorado reported the nation's first known infection. But it doesn't look like that's a problem for U.S. equity investments. Alan Higgins, Coutts CIO, is still with us. And Alan, the U.S. has been hit just as hard, if not harder, than the U.K. in terms of the virus. Depends how you measure it. And yet the equity indexes are soaring. You mentioned previously that's because of the makeup of those indexes, the mega tech companies, the mega cap growth companies that are there. Do you think there's still room to run for the FANG stocks?
Yeah, you're right, Matt. It's all down to the composition of the US market, which is now over 40% in tech, quite incredible. And now we've got, obviously, Tesla's joined the party. Look, on the one hand, it's sustainable because rates are low. If there's one factor that, if you like, works for stocks, it's focusing on the discount rate. So the fact that we have ultra low discount rates means that these growth stocks, they can be more expensive. However, they can be, but now I have to say it's looking really, really stretched. And that's why we'd have much more of a bias towards cyclical stocks now. We still maintain, of course, some positions in these types of stocks. But, I mean, Tesla on 300 times earnings. Even Apple's on 33 times earnings. I remember just 5-6 years ago, it was on 10 times earnings. And you could buy it at nearly a 3% dividend yield. Essentially, these growth stocks have priced in this very low discount rate. Fine. That's what we expected, but now it's time for a pause because these ratings are really, really extreme.
Are you worried, Alan, about inflation at all in the U.S.? I mean, we've been talking to people who point out those industries involved with delivering internet goods have seen scarcities. For example, shipping and logistics. And those prices are going higher. I also talked to a couple of investors yesterday who think we could see the 10-year yield at the end of 2021, 1.5% approaching 2%. What do you think about that?
So, Matt, I would say, let's say we get some inflation. What would the Fed do? Nothing. What would the MPC, the Bank of England, do? Nothing. What would and there's evidence for that. We saw inflation in 2011. What did the Fed, the MPC do then? Nothing. So even if we get inflation, which, by the way, I think is a long shot. Yeah, I see this graph of break-evens. But look, it's just gone back to normal levels. It was dislocated back in March, like a lot of asset classes. But if you do a longer-term chart, if you pull it up on your Bloomberg and do GPW or GP monthly on that break-even chart to see a longer-term chart, you'll see around 2% is kind of the normal level for break-evens. So there's little evidence for higher inflation globally. We see low inflation everywhere, even in China right now. However, we have had, if you like, magic money in the States, incredibly, and we've got more magic money to come, i.e. money just plonked in people's bank accounts. And therefore, you know, could there be a bit of inflation? Sure. But more importantly for me, especially with the new Fed policy, which is basically average inflation over a long term, they're going to do nothing, absolutely nothing about it. Could bond yields go higher? I doubt it. Bonds are not exactly wonderful investments, but I doubt it with all this QE. And by the way, that's been one of the worst, as it's December 31, as you'll know, Matt, one of the worst forecasts is, next year bond yields are going to rise. They just haven't.
Alan, thanks so much for joining us. Really appreciate your traditional New Year's Eve visit to us. Alan Higgins, Chief Investment Officer at
Happy to do so.
Bankers to the Queen. Alan's going to be continuing the conversation with us on Bloomberg Radio at 9 a.m. UK time, so tune in then if you're in the city on London DAB Digital Radio. I want to bring you some more news from China, and this time it's Hong Kong, the former city-state ordering Jimmy Lai be returned to prison. So if you'll recall, Jimmy Lai from Next, which publishes the Apple Daily newspaper, had been released on bail. Beijing had criticized Hong Kong judges for allowing him out of jail. He then stepped down from his position leading Next and now is being ordered to return to jail. He has been a key figure in the Hong Kong democracy protests, and one that Beijing clearly did not want to see freed. Jimmy Lai is being returned to jail as ordered by a Hong Kong court. Up next, Boris Johnson tightens restrictions for swathes of England as the new COVID variant surges. We'll discuss that further. This is Bloomberg.
Second person has died in central China after being infected with a new SARS-like virus.
Our top story is this Thursday. China bans travel from the coronavirus epicenter with at least 17 dead and hundreds infected.
We now have a name for the disease, and it is COVID-19.
We're seeing fresh cases out of the U.S., Germany, France, Iran.
With the Dow Industrial set to record its worst drop since 1987, the VIX, which is now the highest going back since 2008.
Governments and all other policy institutions are called upon to take timely and targeted actions to address the public health challenge of containing the spread of the coronavirus.
We're looking at sending checks to Americans immediately.
The United States is working with our friends and partners around the world to stop the spread of the virus.
There's definitely some fear and uncertainty in the market, especially if you look at what happened overnight with the U.S. overtaking China as the #1 place with the most confirmed cases of coronavirus.
I've developed mild symptoms of the coronavirus.
This is a crisis like no other. It's worse since the Great Depression.
Global deaths from the coronavirus have now surpassed 500,000.
The global death toll, it hits 1 million.
President Trump has tested positive for coronavirus.
I learned a lot about COVID. I learned it by really going to school.
We are all in this together.
COVID cases are surging across Europe.
The UK is forecast to borrow a total of £394 billion this year, equivalent to 19% of GDP.
It's amazing to see the vaccine coming out. It's amazing to see this tremendous shot in the arm for the entire nation, but we can't afford to relax now.
And that was a look at how the pandemic played out this year. Of course, it keeps on going. Boris Johnson has imposed tighter virus restrictions on most of England as pressure piles on hospitals. The UK is racing to roll out mass vaccinations with the AstraZeneca Oxford University shot gaining approval just yesterday. Joining us now is Bloomberg's Emma Chandra to talk more about this. Emma, talk to us about the restrictions that now face more of England. What's the scope?
The scope is that 20 million more Britons have been put into the top tier of restrictions. That's tier 4. That brings it to about 78% of the English population now under the toughest restrictions. Many more in tier 3, which is just the next level down. We're really in something akin to the lockdown that we saw in the first phase of this virus back in March and April earlier this year. We're looking at secondary school children being delayed going back to school. That was due to happen some next week. Primary schools in London, about 2/3 of those are going to be closed for the beginning of the new term. Businesses in tier 4, all but essential businesses, now forced to close. That's restaurants, that's anything really public facing. A lot of people being forced to go online in terms of their business. And Boris Johnson really warning yesterday of what he's calling extremely tough months ahead. And all of this, of course, came as the UK approved that Oxford AstraZeneca vaccine.
All right, Emma, thanks very much. Emma Chandra, they're reporting on these tougher restrictions for us out of England. Of course, we're going to continue to cover this story. It could be one of the reasons that we see such a big drop in the FTSE. Today, the index is only open partially, for part of the trading day, but right now it's down 1.4%, a drop of 92 points. Coming up, it's been something of an eventful year, but what stories should investors watch out for next year? We'll discuss 2021 next. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open, 30 minutes into the holiday session right now. And we're seeing, the DAX is closed, and so are many of the European equity indexes. But the FTSE is open and down 1.4%. Right now, a drop of 90 points to 64.66. Of course, this happens as the pound gains. And also, it should be mentioned, as we were just talking with Alan Higgins about, that you've got so many of these much unloved value stocks as the big weights on this index, and they are not helping it on the last day of the year. Let's get the Bloomberg First Word News. These are today's top stories from the Bloomberg Terminal. Ireland is entering its third lockdown as the pandemic reaches what health authorities are describing as unimaginable levels. The government is closing non-essential stores, limiting travel, and delaying the reopening of schools. The measures will last for at least a month. German Chancellor Angela Merkel is urging discipline in the long fight against the coronavirus. She used her last New Year's address as chancellor to say perseverance will be needed during the winter as the vaccine is rolled out. Amid concerns about the shot's safety, she said she'd get the vaccine as soon as it's her turn. Temperature issues have delayed over 140,000 doses of Moderna's vaccine bound for Texas. Several shipments showed signs of having strayed from the required ultra-low temperature range, forcing some to be replaced. Moderna's vaccine must be kept super frozen for both shipment and storage. The snag underscores the obstacles the U.S. is facing in rolling out the vaccine. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 analysts and journalists in more than 120 countries. Now, 2020 has been a year like no other. Across the world, many may wish to say good riddance to it at midnight tonight. 2021 promises to bring hope, but also some new challenges. Let's talk to Bloomberg's Quick Take editor, Guy Collins, about what's in store. And Guy, apart from the pandemic, this year has been dominated by U.S. political news, namely the presidential election. What are we going to be focusing on in terms of Washington, D.C. next year?
Well, that's right. And obviously the inauguration on January 20th of President-elect Joe Biden is going to be front and center. And the big issue, of course, is what's he going to do once he's in the White House? He's managing a national crisis, of course, with the pandemic. He's pledging to speed up the flow of vaccinations, which has got off to a slightly slow start, according to initial data. But he's got a long list of things he wants to accomplish in his first 100 days. He wants to start rebuilding international relations, of course. The Trump administration took a very aggressive stance towards organizations like NATO and the World Trade Organization. Biden has said that he wants to revoke the U.S. decision to withdraw from the World Health Organization. He's got plans to raise taxes, of course, but only on those earning more than $400,000 a year. He wants to roll back some of the immigration restrictions that the Trump administration brought in, and he wants to push forward on health care as well with an expansion of the existing Obamacare program.
And of course, space exploration. We're going to go back to the moon. We want to get to Mars. Very exciting stuff to be done in terms of NASA. There are other elections coming up this year. What are the big ones, besides the Georgia runoffs, to be paying attention to?
Well, indeed, it's a year of elections, and I mean, you mentioned Georgia. That's the big one next week. Could decide, of course, which way the Senate goes in Washington. But outside of the United States, September is going to be a very big month. Germany has its election, and Angela Merkel is standing down as chancellor after 15 years. And of course, many of the voters in Germany who will be casting their ballots in September have no memory of any other German leader. So it's going to be a sea change there. The centre-right still have a strong chance of retaining power, albeit in a coalition, but obviously there's 9 months to go and a lot can happen, and that's going to be one to watch. Aside from Germany, we've also got elections in Russia in September, parliamentary elections, but there'll be a referendum essentially on the popularity and authority of Vladimir Putin, who has been in power himself for 20 years now, and that's going to be clearly one to follow as well. And then in Hong Kong in September, we're going to have the delayed legislative elections, the vote that was going to take place in September of this year and got delayed because of the pandemic.
Hang on, I mentioned the Mars mission. I see now on the slide the date February 18th. What's the story with that? That seems kind of soon.
Yes, no, it's really interesting, actually. There are two probes currently en route to Mars, which are going to land on the planet. One is a NASA probe, and the other one is Chinese. And it's not the first time, of course, spacecraft have landed on Mars. We've been going there for nigh on 50 years now in one form or another, but the level of exploration is being stepped up. And what's really interesting in the space program is the degree of private finance now that's coming into it. You've got the two wealthiest people on the planet, Jeff Bezos and Elon Musk, both essentially funding their own space programs. Musk wants to go to Mars and build a colony there at some point in the next 20 or 30 years. Both Jeff Bezos and Elon Musk have plans to put spacecraft on the moon. Bezos is talking about setting up a base on the south pole of the moon. The mix of public and private finance in space is really fascinating. And of course, just a few days ago, China managed to land an unmanned craft on the moon, scoop up moon rock and bring it back to Earth. And that's the first time that's happened in decades. So there's a lot to watch for in space.
Yeah, they've been on the dark side of the moon, which is pretty cool, too. Guy Collins, thanks so much for that. Guy Collins there from Bloomberg Quick Take talking to us about what to watch for in 2021. He mentioned the Senate runoffs in Georgia. They're expected to play out a lot like the presidential election did last month. The result could be delayed by a few days or a few weeks while record numbers of votes are counted. We'll talk about those votes next week. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are 40 minutes into the holiday trading session. Not all equity indexes are open, but those that are down here in Europe. The FTSE off 1.4% as the pound rises. You can see cable there up right now to 136.59. The CAC 40 in France also down just about 0.5%. Let's get the Bloomberg Business Flash. These are today's top corporate stories from the Bloomberg terminal. The new owners of J.C. Penney are replacing Chief Executive Jill Soltau less than a month after relaunching the chain that went bankrupt during the pandemic. She's due to leave later today, and the company is starting the search for a new CEO. J.C. Penney's property arm remains in Chapter 11, but expects to emerge in the first half of 2021. ExxonMobil is indicating it's incurred a fourth straight quarterly loss. The oil giant is writing down as much as $20 billion on its upstream assets. It's also struggling to maintain its $15 billion a year dividend program. But there are some positives. Higher oil and gas prices helped upstream profits compared to the third quarter. Amazon is pushing further into podcasting, agreeing to buy producer Wondery. Terms haven't been released yet, but Bloomberg first reported in September that Wondery was exploring a sale. The Wall Street Journal later said Amazon was in the lead at a valuation of about $300 million. And that's your Bloomberg Business Flash. The Senate runoffs in Georgia are expected to play out a lot like the presidential election did in November. That's a result delayed by days or even weeks while record numbers of votes are counted and possibly contested. These seats are critical to deciding whether the Senate is evenly split or if Republicans get majority control. For more on the state of play and what this could mean for the Biden administration, we're joined by Bloomberg's Bruce Einhorn. Bruce, we should first explain to those unfamiliar with the U.S. Political system, if the Senate's evenly split, then the vice president has the deciding vote.
That's right. So with Vice President-elect Kamala Harris poised to break the tie, the Democrats would be in control, even though it would be an even split of 50-50.
All right, so that's important to point out because if both Democrats win and the Senate is split, Biden and his vice president, Kamala Harris, will have effectively control. The Democrats will effectively have control of Congress and the White House. That's why it's so important. What do we know about who's winning right now?
Well, typically Democrats don't do very well in runoffs in Georgia because fewer people turn out to vote in the runoff than in the first election among Democratic voters. But this year is different. We know that there's been a lot of early voting and absentee voting, record numbers, and the people who are voting, it seems that, well, the people who are voting early tend to be voting for Democrats. So, you know, a lot is then up to what's going to happen on Election Day. Will the Republicans turn out? Problem is that Republicans are in a bit of disarray at the moment because President Trump has been consistently attacking the Republican governor of the state and the Secretary of State. He even yesterday called on Governor Brian Kemp to resign.
What do we know about how long it's going to take to figure out the results here? Because, you know, it took maybe longer than a lot of people expected in November to figure out the results of the presidential election, and there could be some similarities. Bruce.
That's right. After the November election, it took 10 days for the networks to call the state for Joe Biden. And then after that, there were multiple recounts and audits. So, you know, it's always possible that the election will be a blowout one way or the other, and then we'll know very quickly. But I think most people are expecting that this is going to be very, very close. So given that, it's quite likely that it will take weeks, days, if not weeks, to get a clear picture. And then even after that, probably there'll be legal challenges. So this can go on for a long time.
Bruce Einhorn, thanks so much for joining us. Bloomberg's political editor, talking to us about the Georgia runoffs that are so important to the U.S. political landscape. Up next, can small cap strength sustain into 2021? We'll put that question to MLive's Laura Cooper next, as the Russell 2000 trades more than 30% above its 200-day moving average. This is Bloomberg.
No deal is perfect. I guess that the shortcomings are possibly still, we have a negative list, something that we always resented. We have no negative list in Europe for Chinese business. We actually, from the legislation, we get told these areas you cannot invest. Now we have to see how that squares off with this deal, but still we have these constraints. And as you know, Tom, we have every year this position paper of the chamber, solid 400 pages with more than 900 recommendations. We have to work through the details in order to see where we have real improvements. The shortcomings are possibly, when you look at the negotiation side that wanted to have a stronger sustainability basket, there has been some very soft language on forced labor, on ILO ratification, and so forth. So the soft part of that could actually be challenged by the European Parliament in the second part of 2021.
And that was Bloomberg Markets China Open anchor Tom McKenzie. They're interviewing EU Chamber of the Chamber of Commerce in China President Jörg Wuttke after yesterday's agreement. The EU strengthening its relationship with China, just as Beijing cracks down on democracy activists in Hong Kong. Hong Kong's top court has ordered media tycoon Jimmy Lai back to prison He had been freed on bail, but he is now being ordered to return to jail. He was charged earlier this month under a sweeping national security law imposed by Beijing in June. Prosecutors said he colluded with foreigners by calling for sanctions against the mainland. Joining us now is Bloomberg's Gregor Hunter in Hong Kong. So, Gregor, he was out. Now they want him back in. Was this the same judge that allowed him, that set him free, that's now ordering him to be returned?
Well, this is a separate court. This is the Court of Final Appeal that's ordering Jimmy Lai back to jail. The scope of this is fairly limited. His next hearing is going to be on February 1st as he awaits trial under the city's national security law. And Jimmy Lai has really been a persistent thorn in the side of Beijing for many, many years. He was arrested in August after the national security law passed, bypassing Hong Kong's legislature. But he was only arrested under the national security law since December. Now, prosecutors charged Lai with colluding with foreign powers, a term which potentially carries a life sentence. Mr. Lai had been out on bail since last Wednesday. The People's Daily slammed that decision by the lower court in a commentary published during the weekend, the Communist Party mouthpiece calling the decision unbelievable.
And of course, they do tend to get what they want. What is the state of freedom of the press in China, just as, and Hong Kong, I should be more specific, just as the EU makes this deeper deal with China?
Well, Mr. Lai's arrest is one of the most high-profile in the state this year, if not the most of a media figure, and caps a steep decline in Hong Kong's position in Reporters Without Borders World Press Freedom Ranking. Hong Kong was 80th out of 180 countries this year. In 2002, that figure was as high as 18, so we've fallen quite sharply. Advocates of press freedom fear, though, that the national security law will mean that Hong Kong's laws will start to more closely resemble China's. Authorities around the world imprisoned more journalists in 2020 than any other year on record, according to the Committee to Protect Journalists, and China jailed the most reporters worldwide for a second year running, including a Bloomberg News staffer.
All right, Gregor, and that's a story that we're going to continue to cover as well. Gregor Hunter there in Hong Kong covering the Jimmy Lai trial. He's being ordered now back to jail after he had been released on bail. Our Bloomberg, let's get to Bloomberg's MLive macro strategist, Laura Cooper. She joins us now with her outlook for next year. Let's talk, first of all, Laura, about this rally that we've seen in. Not all equity indexes have hit highs. We see the FTSE down 15% year to date, but in the U.S., certainly, we see record after record after record, and a lot of risk assets are looking at valuations that seem possibly unsustainable.
Well, absolutely. But I think when we look at, kind of take a step back and look at what are the factors that have underpinned stocks reaching these record highs, it's the fact that, don't fight the Fed or don't fight central banks really took on new meaning this year. So, those conditions are likely to prevail heading into 2021. So we still have this exceptional policy accommodation. We still have ample liquidity. And ultimately, we have these upbeat growth prospects of the fact that the vaccine deployments are taking hold. So should that reflation scene kind of pan out, it's no wonder that stocks continue to kind of make new highs. But ultimately, I do think there are a number of risks ahead that maybe kind of this bullish consensus is not yet kind of capturing. So we do potentially have, fiscal stimulus falling short. The virus is not yet contained. We could see stumbles on the vaccine front. But I think ultimately, if we don't see material change in the underlying drivers, I would expect that stocks to continue to advance, the dollar to decline, and kind of those equities outside of the U.S. to catch up, given the fact that we are seeing really those concerns about frothy valuations in some of those key, U.S. tech sectors.
Small caps is what you guys are talking about today in terms of your question of the day, and I've been looking at the Russell 2000 in the U.S. session in the afternoons, and we just see 30% above its 200-day moving average. It just continues to run, well, at least yesterday, higher after a few days of pulling back a little bit. Can small cap strength sustain into 2021 is, I guess, a subsect of the question I already asked you, but what are you hearing?
Absolutely. I think we saw the catalyst for small cap upside come in early November. So the fact that we had this positive vaccine news, and I think the pace of gains that we've seen since then. So you mentioned, the Russell 2000 is up 30%. It has outpaced the S&P 500 through December, and we've even seen European small caps record double-digit gains over the past month. So I wouldn't expect that pace to be sustained, but certainly those stocks are mostly levered to that reopening trade. So, so long as we continue to see growth prospects remain bright, they are, trading at steep discounts relative to kind of those frothier kind of large cap stocks. So I would expect that, those small caps could outperform next year. Now, I wouldn't expect that to be kind of a straight line forward, just given the fact that, there are stumbles. We are seeing this K-shaped recovery emerge, across economies. So, if we see, for example, these lockdowns extended, the virus not yet contained, those hospitality, those energy sectors could continue to struggle. So I don't think it's going to be, a smooth ride, but certainly I would expect more upside for 2021.
All right. Laura, thanks very much for joining us. We wish you a happy new year. Really appreciate your input throughout 2020 and look forward to working with you again in 2021. Our MLive macro strategist, Laura Cooper. Check out her work and the work of her colleagues by typing MLIV Go on your Bloomberg terminal. It's a great blog. I read it every morning as soon as I wake up, and I highly recommend that you do the same too if you care about these markets. That's it for the European Open. Stay with Bloomberg Television. Up next, it's Surveillance with Francine Lacroix. This is Bloomberg.
China approves its first vaccine for general use. This as a second U.S. case of the UK's COVID-19 variant is detected, this time in California. Cutting it close, UK lawmakers approved the post-Brexit trade deal less than 24 hours before the end of the transition period. But lockdown bites in England. Boris Johnson imposes tighter restrictions on most of the country, warning of extremely tough months ahead. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, let's check in on the markets. First of all, happy New Year's Eve. It is a good day to be together and just to reflect on the year that we've had. It feels like we've had about a decade in the last 12 months. And of course, our thought goes to the families of the ones that have lost loved ones because of COVID-19 or otherwise. Now, markets ending a tumultuous year on a quiet note. Global stock indices actually holding near a record high. The dollar at the lowest in 2 years. I'm looking at the offshore yuan strengthening to the highest since June 2018. And then we also look at pound after we finally have Brexit, and that's finally been voted through in the House of Commons and the House of Lords. And you can see it's pretty much unchanged. The frenzy in cryptocurrencies showing no signs of slowing down, though. I know we're looking at Bitcoin vaulted above 29,000 before pulling back to around 28,825. Now, as we reach the end of 2020, one story dominated the news and the markets, and that, of course, was COVID-19. Let's take a look back at the year that was.
A second person has died in central China after being infected with a new SARS-like virus.
Our top stories this Thursday. China bans travel from the coronavirus epicenter with at least 17 dead and hundreds infected.
We now have a name for the disease, and it is COVID-19.
We're seeing fresh cases out of the U.S., Germany, France, Iran.
With the Dow Industrial set to record its worst drop since 1987, the VIX, which is now the highest going back since 2008.
Governments and all other policy institutions are called upon to take timely and targeted actions to address the public health challenge of containing the spread of the coronavirus.
We're looking at sending checks to Americans immediately.
The United States is working with our friends and partners around the world to stop the spread of the virus.
There's definitely some fear and uncertainty in the market, especially if you look at what happened overnight with the U.S. overtaking China as the #1 place with the most confirmed cases of coronavirus.
I've developed mild symptoms of the coronavirus.
This is a crisis like no other. It's the worst since the Great Depression.
Global deaths from the coronavirus have now surpassed 500,000.
The global death toll, it hits 1 million.
President Trump has tested positive for coronavirus.
I learned a lot about COVID. I learned it by really going to school.
We are all in this together.
COVID cases are surging across Europe.
The UK is forecast to borrow a total of £394 billion this year, equivalent to 19% of GDP.
It's amazing to see the vaccine coming out. It's amazing to see this tremendous shot in the arm for the entire nation, but we can't afford to relax now.
A look there at the key developments in the COVID pandemic, including Britain approving the Pfizer vaccine. Of course, yesterday, the AstraZeneca Oxford shot became the second approved vaccine in the UK. Now, a second also U.S. case of the highly transmissible COVID-19 variant has been now detected in California. That's a day after Colorado reported the nation's first known infection. We're joined by our editor, Eric Fanner, to talk about all of this. Eric, first of all, what do we actually know about the new variant?
Well, we know that we've heard that it's more contagious than the original variants that were out there. We don't think it's necessarily any more dangerous in terms of fatality or anything like that. The other thing that we have to suspect, I think, at this point, is that it's probably out there a lot more widely than we think in some of these places that are only now uncovering cases. It's a little bit reminiscent of those some of those early moments we ran through when the virus was spreading from China, and some of these countries were reporting a handful of cases. In fact, it was probably pretty widespread already at that point, and the same could well be true for this new variant, you've got to imagine.
But Eric, we understand that the vaccine, of course, still work against this new variant. How have the rollouts been going in Europe and the US?
Yeah, that's right. It looks like they will, or they can at least very quickly engineer them so that they will be effective against new variants. The rollouts are proceeding. The one in the U.S., there's been some concern, of course, that it's not going as quickly as the expectations, which were for 20 million doses to be delivered by the end of the year. With the hours waning there very quickly, they're only at about 3 million or so well behind. That said, that's a large number of doses, and the U.S. is ahead of Europe and other regions. It's about half of the global total that's been administered so far. So it is moving. It's just not moving quite as quickly as was hoped.
Eric, we're also hearing of new clusters. Beijing, that was largely rid of the disease. Also, certain parts in Australia. How much of a worry is there amongst the scientific community that actually this mushroom's back out of control?
Well, I mean, there's small numbers at the moment, right? Those clusters that you're seeing in China, other parts of Asia that had pretty much contained it. There are a handful of cases there now. I mean, look, this thing has not been squelched, obviously, and it is out of control to some extent in parts of Europe and the U.S. So there's certainly that danger. That said, China, since the initial days of this in Wuhan, has done a pretty good job of keeping it in check.
All right, Eric, thanks so much. Bloomberg's Eric Fanner there looking at some of the consumer goods, but also the virus for us. Now, coming up, we have a full roundup of the Brexit news. It's finally happening. Yes, tomorrow is January the 1st. The UK's trade deal with the European Union clears Parliament in just one day. We'll run through what changes from tonight. This is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, there's a lot going on for a December 31st. And once again, let me just extend all of our good wishes and fortune for 2021. Now, less than 24 hours before the final split from the European Union, and Boris Johnson's post-Brexit trade deal has been approved by the UK Parliament. Well, the Prime Minister signed the agreement after it was rushed through both chambers in just a single day. Let's take a quick look at exactly what's changing from tomorrow.
No matter what, the UK's relationship with the EU is changing. Europe's 4 freedoms of movement will no longer apply from 2021. For Brits travelling across the Channel, you'll need 6 months on your passport and only be able to stay for 90 out of 180 days. Want to live and work? Well, the withdrawal agreement protects the rights of those already abroad, but to move in the new year, there will be new costs and residency requirements. Goods trade will see more friction. There will be new customs declarations, special certificates to move food, animals and plants, and you'll need the right paperwork to even get close to some UK ports. To avoid chaos, the UK is giving importers a 6-month grace period, but the EU is not following suit. There are changes for services and capital too, though a lot remains unclear. The City of London is set to lose its automatic right to sell into the EU. The UK has granted broad equivalence to EU capital, auditing and insurance, but Europe has been narrower, granting just temporary equivalence for UK clearing, and is in no hurry with other financial services.
Anna Edwards there on what will be different between the EU and the UK from tomorrow, January 1st. Now let's get more with our reporter, Joe Mays. Joe, does this actually mean that Brexit is now over politically?
Yes, I think definitely in the short term it's over. We had the wrangling over these trade talks. That's all done. I do think that Brexit will still be a live issue in the months and even years to come, because the UK needs to decide what it's going to do with this new sovereignty that it's reclaimed through this trade deal, because we know that the EU can put tariffs on UK businesses if they feel like the level playing field has been distorted. So that will still be a question going forward. So this relationship will still be at the centre of British politics, I think, for a long time.
Will the UK actually be ready for Brexit tonight?
I think that we are expecting some disruption at the borders, but I think that might not happen in the first days or even weeks, because we know that the freight levels are quite low at this point of the year, naturally so. Lots of stockpiling has happened. The key question is, are the businesses ready for the new paperwork? I think that's a question where the government is still a little bit uncomfortable, doesn't quite know. So I think that, yes, the UK is doing as best it can on the government side. It's really about businesses now.
All right, thanks so much, Joe Mays there, our Brexit reporter, who's, of course, been working nonstop around the clock for the last 4 years, joining us this morning. Now let's get more on the challenges facing UK companies. Joining us today is David Bailey. He's Professor of Business Economics at the Birmingham Business School. He's also Senior Fellow at the UK in a Changing Europe, and a little bit of an expert when it comes to car makers. So, Professor Bailey, thank you for joining us. When you look at some of the concerns about the paperwork and, car manufacturers getting the right supplies that they need into the country, how much of a disruption will we see in terms of prices going up, inflation going up, or just goods stuck at the border in the initial phase?
That's the really big question. So the deal, I think, is welcome, of course, in that it avoids tariffs and quotas as long as rules of origin rules are complied with. But there's a lot of non-tariff barriers coming in, despite what the Prime Minister has claimed. So, the cost of completing customs declarations, complying with rules of origin rules, possible delays to the very finely grained supply chains that bring in components and take them out from the UK. Those costs are going to be quite substantial. Just in terms of completing customs declarations for the UK economy, there's a cost of something like £15 billion a year for the whole economy. So these are going to add up. It will put in extra friction. And I think it's pretty certain that costs and prices will increase over time.
Is it difficult to know by how much prices will actually increase by, Professor? And by the time we'll have these price increases, will there be other events having taken over? Are we looking at, less multilateralism in general in the world?
I think that's a very good point. So I think companies will have to change their strategies to cope with what Brexit means. That might involve changing where their production takes place. It might mean sourcing more in the UK in terms of components or less. Remember as well that the whole auto industry is transforming towards an electric future, and there is some flexibility in the deal allowing more content from outside the UK and the EU in the short term. But by 2026, there's got to be a lot of local content. So you've got Brexit coming along just at a time when the industry is completely transforming itself.
The UK sector, is there a sense that actually it's been sacrificed in order to have a free trade of movement? Free movement of trade, rather?
Sure. No, I think that The deal, in as far as it goes, is going to be welcomed by much of manufacturing and by automotive. It's avoided tariffs. If there'd been tariffs, I think that would have killed the mass industry in the UK. We would have seen huge job losses and a lot of plant closures. That's been avoided in the short term. I think that opens the green light to some investment which had been stalled simply because big multinationals didn't know what the trading relationship would be. So I think we'll see Nissan making the new Qashqai in Sunderland in 2021. Peugeot may invest in some production in the UK as well. But I think longer term, there are these questions about how this extra friction will stack up. Just to give you an example, the UK is lagging badly behind in the electric vehicle supply chain. We don't really make batteries at scale in the UK. Now, we know that in 6 years' time, because of this deal, the batteries really have got to come from the EU or the UK. If the investment has gone into Europe, it doesn't make much commercial sense to bring a battery from Europe into the UK to go into a car to then export. So if we want to anchor production in the UK, we've got to invest in making batteries. So some profound implications for the deal about the future direction of the industry.
Professor, give me a sense of what you think the UK economy will become in 4 or 5 years. What will London become? Will we have lost our way to New York and other capitals, even in Europe, or can the UK actually become an attractive place for investments?
That's a very good question about financial services. So, in a sense, the deal that we've seen agreed really, it doesn't really cover financial services other than laying the foundations for possible agreement in the future. So there's that excellent report that we just heard said the UK has really granted equivalence on a whole load of financial services to the EU, but the EU has not done the same in return. So financial services, for example, will lose their passporting rights into Europe. We're already seeing elements of the financial services value chain break off from London and go to other places. Now, there's a big question then about, as we just heard as well, about the fact that this is really a new beginning. There's going to be a need for further agreements going forward. So the deal really is simply a starting point. There's going to have to be a whole load of extra work around financial services, around data flows, and also about regulatory cooperation between the UK and the EU. That's going to go on for years, actually.
Do we underestimate how much the UK will actually need the US as a viable partner on trade in the coming, months, years, and decades? And what will that relationship look like?
That's one of the big questions. So certainly from the government's point of view, one of the reasons for kind of breaking away from the European Union was this ability to do trade deals with other countries, including the US, and that's very much top of the list for the UK. Whether that's a view shared in the US, of course, is a very different perspective. So the hope is that there can be some sort of trade deal between the UK and the US to boost trade between the two. However, that's going to raise all sorts of questions, for example, around standards in farming and agriculture, which in turn the EU will have a view on. And also that boost to trade between the UK and the US isn't going to compensate for the loss of trade between the UK and the EU. So effectively, what the UK has done is put up some non-tariff barriers with the biggest single market in the world, which is on its doorstep, in order to try and say to the rest of the world, we're open to trade. So overall, the net economic cost of this will be quite significant, and that will be a drag on the UK economy over the next 10 years.
The US, we found out today, will slap additional tariffs on the EU. What role will the UK play in further disputes?
Yeah, that's going to be an interesting question, because the UK was very much, in a sense, the US's way into the European Union. But that will no longer be the case. So, if there's a concern in the US about something that's happening in the EU, the US president isn't going to be making a phone call to Boris Johnson anymore. They'll make the phone call directly to Angela Merkel. So, the UK has lost that really important role that it played as a bridge, I think, between the US and the EU. And the UK will be looking to cut its own trade deals with countries, and in particular, the US. But as I said, I don't think the boost to trade from that will be that significant. And if you remember as well, the US already has very low tariffs on things like cars, only 2%. So UK companies like Jaguar Land Rover already sell a lot of cars into the US, and a trade deal isn't going to boost that much further.
Thank you so much for joining us today there. David Bailey, Professor of Business, talking about Brexit and talking about some of the things that we should be watching out for. He's Professor of Economics at the Birmingham Business School. Now, coming up, we take a look at what to expect in 2021 and preview the pivotal Georgia Senate races in the U.S. This is Bloomberg.
no deal is perfect. I guess that the shortcomings are possibly still, we have a negative list, something that we always resented. We have no negative list in Europe for Chinese business. We actually, from the legislation, we get told these areas you cannot invest. Now we have to see how that squares up with this deal, but still we have these constraints. And as you know, Tom, we have every year this position paper of the Chamber, solid 400 pages with more than 900 recommendations. We have to work through the details in order to see where we have real improvements. The shortcomings are possibly, when you look at the negotiation side that wanted to have a stronger sustainability basket, there has been some very soft language on forced labor, on ILO ratification, and so forth. So the soft part of that could actually be challenged by the European Parliament in the second part of 2021.
Our Tom McKenzie there in China, speaking with the EU Chamber of Commerce in China president. He's Jorge Wütke. Now, here's one of the biggest stories to watch next week. The Senate runoffs in Georgia in the U.S. They could play a lot like the president, or they could play out a lot like the presidential election in November. That's a result delayed by days or weeks while record numbers of votes are counted. Now, these seats are critical to deciding whether the Senate is eventually split or if Republicans get majority control. Democrats need to win both seats to regain control of the upper chamber of Congress. And of course, we'll bring you full live coverage of that next week. And then a little bit later, we also have the reporter who's traveling to Georgia, and that's Emily Wilkinson. She joins us in about an hour and a half from now. Coming up, the busy restaurants of last summer seem like a world away. Well, as much of Europe prepares for a winter of restrictions, how is the hospitality sector facing up to the challenge? We talked to the London restaurateur Francesco Mazzei. That's coming up next, and this is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, the culmination of the Brexit story comes as Boris Johnson imposes tighter virus restrictions on most of England. The UK is racing to roll out mass vaccinations with the AstraZeneca Oxford University shot gaining approval yesterday. Now, the Minister for Vaccine Deployment, Nadim Zahawi, told Bloomberg that the UK has the capacity to effectively deliver the vaccines from Pfizer and AstraZeneca.
As the CEO of AstraZeneca said today, they can potentially manufacture 2 million doses a week. We have the infrastructure to deploy that. So at the moment, my I guess, limitation is the speed at which we can get deliveries from both AstraZeneca and Pfizer, not the infrastructure.
Well, joining us now is Bloomberg's Emma Chandra, who spoke to the minister. Emma, more restrictions for more of England. What exactly is the scope?
You're absolutely right. Another 20 million people in England added to Tier 4 restrictions. That means 78% of the English population now facing the toughest restrictions here in the UK. And those tough restrictions in Tier 4, Francine, as you know, very similar to the lockdown we saw during the first phase or first wave of the virus back in March and April of last year. All but essential businesses are closed. People being encouraged to stay at home, to only leave home for emergencies or if they have to travel for work. Also hearing that schools delayed opening across England after the Christmas holidays. That's for secondary schools. And here in London, about 2/3 of primary schools will also be closed. Those children not going back to school from January the 4th. And as I mentioned, of course, a big impact on businesses, many of them forced to close now, perhaps being able to move some of their business online. But hearing all of this, of course, yesterday, Francine, when we got that good news about the approval of the Oxford AstraZeneca vaccine.
Yeah, apart from wanting to shout, save me because my kid's school is closed, I do want to ask you about whether, all of these lockdowns, the resurgence of the virus and the people in, of course, intensive care, which we keep on thinking about constantly, whether that's overshadowing, the very positive news about the vaccine.
Yeah, of course. I mean, my son's nursery school, that is still open, so I'm very thankful for that. He'll be going back next week, Francine. But you're right, really overshadowing that news in a way. A bit of a bittersweet day yesterday when we heard both of these new Tier 4 restrictions for much of England, but also that the Oxford AstraZeneca vaccine has been approved, and really vaccine rollout now seen as really the only way to curb transmission of the virus. And in that interview I did with the Vaccine Deployment Minister Nadim Zahawi, he was saying they have the infrastructure ready to roll this out. We know mass vaccinations beginning from Monday next week. They hope to get to about 2 million vaccinations a week. But he also spoke about a number of 26 million people in the UK needing to be vaccinated. Those are the number of people in those 9 groups considered to be the most vulnerable and who will get the vaccine first. Of course, if you reach 2 million vaccinations a week, that's still going to take 13 weeks, Francine, to vaccinate 26 million people. And as the Prime Minister said, we're facing some tough months ahead.
Emma, thank you so much. Emma Chandra there, of course, from our Bloomberg office, looking at these Tier 4 lockdowns and exactly what this means for industries. Now, let's discuss the future of the hospitality sector. My next guest opened his first restaurant at the age of 18. Born and raised in Calabria, he's one of London's best-known chefs, now with a string of eateries in Edinburgh, Milan, and Bangkok. But how has he faced 2020, and how is he looking forward to 2021 after perhaps the most challenging year for the sector in living memory? Well, joining us, we're delighted, is Francesco Mazzei. He's chef patron in Sartoria in Mayfair. He also runs the Trattorias Radici and Fiume. Francesco, thank you so much and congratulations on your recent Italian knighthood. When you look at the challenges of the food industry and lockdowns, how will the London restaurant business actually survive this?
Well, at the moment, morning everyone, by the way, at the moment, we don't survive. All the restaurants are shut, and it's very difficult to see again when we're opening. And I know we got quite a bit of support from the government with the furlough scheme, etc. But it's quite tough because we don't know what's going to happen next. And after April, when the furlough will finish, will be a bit of a situation for us.
But Francesco, I know you've been quite active. So we were just talking in the break. You're doing deliveries for New Year's Eve. There's takeaway. You've done also some cook-alongs on Instagrams and things like that. Does that generate enough money for a restaurant to stay alive, or is it government support? When do the finances run out?
Well, the problem is that, yes, it does. It can be good. It will support, but at the end of the day, you use a third of the staff. So your labor cost is very minimal. But the problem is how many people will be on the street because you cannot survive. You survive only with takeaway and delivery. Of course, we had some rent suspension, some rent holiday, but this is not enough. We need some proper support from the government to make sure that we can live with it. There's been a talk to appoint the Minister of Hospitality that will put a bit of clarity on the future of restaurant business.
Are we going to get bankruptcies? When are you actually expecting the situation to go back to normal? How many, how many people do you need in a restaurant to be able to survive and make money? Is it 60% capacity, or is that more?
Well, you need more. I think you believe you need 80% capacity, but again, it all depends on how much staff you've got, or you're going to use, and how much is your rent. And of course, there's been a lot of the bankruptcy already, especially on the high street shop, like just to name a few, like Byron or stuff like that. And it's going to be very, very tough if we don't know exactly what's going to happen. And of course, we hope the vaccine will now kick on by spring or summer. We all go back to a normal life, and the rest of the business will flourish again. But at the moment, it's all up in the air, so it's quite tough.
Francesco, how will Brexit actually impact the way you import products?
Oh, well, it looks like with this trade deal agreement at the moment, nothing's going to change much. But I'm always been one of the chefs that he always bought as much as he could locally. For example, I get all my fish, all my meat, most of my veg from UK. Of course, I'm importing mozzarella, importing extra virgin olive oil. So it looks like not much is going to change. But let's see what happens in the next few weeks.
I know you've done also a lot of work with charities, trying to feed, for example, NHS workers. You've also been on TV programs talking about, cooking as we all are stuck at home, literally. Francesco, what surprised you the most about, the COVID spirit in London in 2020?
It has been something quite touchy for me, if you ask me, because as you know, I do quite a lot of charity with D&D, which is the restaurant company I'm dealing with, and of course with the Felix Project. I mean, the reaction of the community has been absolutely amazing. I mean, the support we had from everyone has been fantastic. I mean, no one knew that we'll get to this level on this pandemic. So, and there is a lot of people in need, but again, the support I had from friends, family, my staff, and the entire London community has been absolutely fantastic. So actually, it's a good chance to thank you everyone for this, and because I'm sure there's going to be a lot to do still now in the future in terms of charity and helping NHS and people in needs in general.
Do you worry, Francesco, that Brexit will actually change London? I mean, London is really where you've made your mark. It's been a vibrant and incredible city. Will that change?
Well, I'm an extremely positive guy. I mean, I think London will get better as soon the vaccine kicks in and a bit of normality will flow around. I mean, I think London will be better than before. It's going to be an amazing city to come. I mean, probably tourists will come back again, and all is going to be back to normal. That's the hope and the good auspicia we say in Italy for the new year.
Okay, Francesco, a final question, because we've been talking about business for, until now, but I need to ask you, what is your signature dish? I know a lot of people watching don't know what to cook on New Year's Eve. They probably haven't bought anything now. What's your signature dish for tonight?
Well, my signature dish for tonight is the dish that we still keep as a tradition in the family is, believe it or not, bacala. When you say bacala, people think about Portuguese or Spanish stuff, but it's a South Italian thing. It's going to be a very simple, light tomato sauce with capers, anchovies and the black olives, and then we're going to gently pan fry the bacala, and then put in the sauce and finish in the oven for about 20-25 minutes, and then serve with a nice bruschetta on the side. The most amazing rusting every dish that everyone can enjoy.
That sounds perfect. Francesco, thank you so much for joining us today. And of course, we wish you a happy new year. Francesco Mazzei, chef patron at Sartoria. Now, coming up, a crypto Santa rally. Yeah, we talk about Bitcoin. We're talking about various number of things from, of course, hospitality to Bitcoin. It's hit a fresh high to end the year. We look at the stunning rally for the currency in December. More on that next. And this is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, lots going around and a lot of talk about cryptocurrencies. Bitcoin ending on a high. That's as the currency has hit a record $29,000 before then sliding back down slightly. Now, it's another fresh high for the crypto, which has seen an almost 50% rally in December alone. For more on this, we're joined by the one and only Eddie van der Veld, who's been looking at Bitcoin and making all of his followers extremely knowledgeable on Bitcoin. Eddie, first of all, what does this feel like? Is this a rally that will phase out in 2021, or are we just going to see record after record?
Well, you set me up with such high expectations. I hope I don't let down, Christine. Francine. Well, listen, we've had a fantastic 2020, up about 300%. But you're right to ask the question, because Bitcoin is capable of this explosive upside and explosive downside. 2017, 1,400% higher, and the year after, 75% losses. So timing Bitcoin is pretty critical. I think crypto investors are hoping that we are seeing a repeat of a multi-year cycle here. They saw a pinching off of supply earlier this year in May, and they're hoping that this will run them at least through 2021. But we'll see.
So, what triggered the rally in the first place?
Yeah. So as I was saying, in May we had a pinching off of supply, which is something that's written into the algorithm. Every 210,000 blocks that is created by miners is rewarded by a certain number of Bitcoin. And algorithmically, that is pinched off. And we saw the third halvening. And if you look historically, every time that's happened, we've had a rally. But that's not the only thing, of course. Bitcoin's also now a lot more accessible than it has been. Places like PayPal offering people both the ability to trade it and then also storing the custody. So that's also helped.
You know, are the buyers changing, Eddie? I know this is one of the themes that we've been exploring quite a lot. And if the buyers are changing, will they continue to change?
It's hard to say, isn't it? Because, you know, it is really hard to know who is buying anything, really. But what I can certainly say is that I am getting more calls from fund managers who are interested to know from me what is happening. And, you know, they say to me that their clients are pushing them to find out more about Bitcoin. So it feels like it is the wealthy, and that they're looking for a small exposure and hoping for this explosive upside, which can be transformational to a portfolio if you have, you know, a small allocation to it.
So, Eddie, would you say that Bitcoin has finally grown up?
I think that is the major question, isn't it? It feels a little bit less like the Wild West, right? There's a futures contract in the CME. Custody has improved, so you know you're less likely to. You don't need to send your money to an unregistered exchange necessarily to trade Bitcoin anymore. There are ways of doing this in a way that would be comfortable for a professional investor, but being a grown-up asset class and being right for every portfolio, two different things. Bitcoin is still extremely volatile. Significant losses can be made. So, yes.
All right. Thank you so much, Eddie van der Veld. Happy New Year. He, of course, is our resident Bitcoin watcher on Bloomberg. Now, coming up, it's been something of an eventful year, to be very British and, you know, using a euphemism. What stories should investors watch out for 2021? We'll discuss that next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
So we're in one of Wuhan's most popular going out areas. There's lots of hip restaurants around here, breweries, bars. People are out and about, they're socializing, they're eating. Lots of people wearing masks still.
我觉得我不担心了，我觉得武汉市是最安全的城市。现在，会带，因为现在有流感，不光光是疫情，流感也会，而且你进店里面他会要求你戴口罩，你如果不戴，他会让你出来的。
我个人觉得他肯定不是武汉来的，因为现在不管是从科学的角度，还是说我们现实感受角度，如果是从武汉来的话，现在在全球疫情就不可能发生的这么严重了呀。
Talking to people here tonight in Wuhan, it's really interesting to hear their stories 1 year on from what triggered the world's first really harsh lockdown and the first really intense virus wave with lots of people dying and a real onslaught of cases on the hospitals here. People still talk about being affected by the lockdown, both mentally and economically.
早期的时候有过这么一些疑虑，对，然后国内的也有啊，有的地方说武汉来的货怕是有病毒啊。我至少觉得现在武汉市民的各方面的防护、防疫，包括自己的这种意识、防范的意识，是得到了长足的提高。
Behind me is one of the 2 temporary hospitals that were built here in Wuhan shortly after the lockdown started. Now this one here took in more than 2,000 coronavirus patients, half of them critical cases, and they were treated here in temporary buildings built in quite famously under 2 weeks by Chinese construction workers. You can't get inside, there's security, these aren't being used anymore. And have been since about April when they were shut down and the pandemic situation here in Wuhan. And nobody that we've spoken to thought it began here in this central Chinese city. It must have come from somewhere else, and there are a variety of theories, which just really shows that, you know, this still really is a mystery as to where and how this virus and pandemic started. But it does definitely feel that 1 year on from when this all started, things are moving back to normal and that people are moving on here.
China is also stepping up efforts to distance itself from the virus. After basically shutting the WHO out of Wuhan all year, it's now mounting a campaign to cast doubt over China being the source of the virus.
I've just been inside the Wuhan Cultural Exhibition Hall where this temporary exhibition about the pandemic here is taking place, and it's pretty overwhelming. Inside, there's a wealth of exhibitions, dioramas with hospital beds, 3D holograms of doctors working on patients, mannequins of military people bringing medical supplies, big pictures of Xi Jinping, and a real emphasis on his role in containing this pandemic. You can tell that they're really trying to pull at heartstrings and really sort of push the narrative that this city and this country survived and defeated this virus.
经过这次疫情之后，我觉得那几个月会很难受，但是过过来以后，我觉得我比原来更坚强了。但是就像你们今天去看那个展览一样，我还是不能触碰。触碰以后，我心里我还是觉得会很难过，因为我是从这个时间过来的。
In many ways, China has little incentive to find out how this all started. With the virus all but eliminated from its own shores, the public anger at Beijing's early concealments and missteps eased, and the economy on track to take over the US in 2028.
Well, that was a look at Wuhan, once the epicenter of the virus. Now, 2020 has been a year like no other, and across the world, many may wish to say good riddance to it and midnight tonight. Well, 2021 promises to bring hope and also new challenges. Let's get to Bloomberg Quick Take editor Guy Collins about what's in store. Guy, good morning. Apart from COVID, 2020 dominated by the U.S. election. What will we be focusing on in 2021 in Washington when Biden takes over?
Well, good morning. And exactly, January 20th is inauguration day for President-elect Biden, and a lot of attention on what he'll do in his first 100 days, of course. One of the things he says he's going to do is get 100 million vaccinations done. That would speed up considerably the pace that is going on at the moment, and there has been some concern about the relatively slow rollout in the U.S., according to initial data. Biden, of course, has many other things on his agenda. He wants to rebuild international relations. NATO and the WTO, the World Trade Organization, are two organizations that the Trump administration was fairly aggressive towards, and Biden is going to take a more diplomatic approach on those. He said he's going to roll back some of the Trump administration immigration policies, and he wants to expand health care under the Obamacare program. Of course, that's all going to cost money. He says he's going to raise taxes, but only on the wealthy, and of course people will be watching very closely to see how all of that pans out.
Guy, there are other elections coming up this year. What are the big ones?
Well, Germany is going to be very closely watched. They go to the polls in September, and Angela Merkel has been Chancellor for 15 years now, almost 16 by the time the election comes around, which means that if you think about it, some of the younger voters in Germany have no memory at all of any other leader. So this is really going to be a sea change. It's very far from clear who's going to take over from her. The polls are showing that the centre-right is likely to stay in control, possibly in alliance with the Greens. But the election is 9 months away, and really anything could happen. We've also got a couple of other interesting elections in September. Russia has parliamentary elections, and they'll be seen as clearly a referendum on Vladimir Putin, his popularity and his authority. He's been in power for 20 years, and so that'll be pretty closely monitored. And of course, we've got the Hong Kong legislative elections as well. They should have taken place in September of this year, but had to be postponed due to the COVID pandemic. So they'll be taking place in September as well.
Guy, thank you so much. Guy Collins there of Quick Take. We'll have plenty more on surveillance. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
China approves its first vaccine for general use. This as a second U.S. case of the UK's COVID-19 variant is detected, this time in California. Cutting it close, UK lawmakers approve the post-Brexit trade deal less than 24 hours before the end of the transition period. Lockdown bites in England as well. Boris Johnson imposes tighter restrictions on most of the country, warning of extremely tough months ahead. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua. A happy New Year's Eve from everyone at Bloomberg and especially everyone on surveillance. We really wish you a nice New Year's Eve and a much better 2021. 2020 has had its challenges. We'll talk about them now. Also, a couple of course, things that have come out of it in positive news, I guess, is stocks. But our first and foremost thoughts are with the people that have lost loved ones this year. Tom Kienoff will have a full roundup of the top stories, including COVID-19 and stimulus in the U.S. But first, let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Mitch McConnell has made it clear the direct payments in the stimulus package will not be increased to $2,000. The Senate Majority Leader says a House bill that would do that has no realistic path to quick passage in the Senate. The larger payments are backed by Democrats and President Trump, but McConnell says the House legislation falls short of what the president wants. The British Parliament approved Prime Minister Boris Johnson's post-Brexit trade deal with less than 24 hours to spare. Britain formally leaves the European Union single market tonight. The rush to get the deal through Parliament in a single day ends the 4-year saga that gripped British politics and divided the country. And a British judge will rule Monday whether WikiLeaks found Julian Assange should be extradited to the US to face criminal charges. In recent weeks, there's been talk that President Trump might pardon Assange. He's accused of working with former soldier Chelsea Manning to get classified documents. But the president praised Assange during the 2016 campaign when WikiLeaks released emails that hurt Hillary Clinton's campaign. U.S. health officials admit that the coronavirus immunization program is off to a slow start. That raises the prospect that the all-in bet on vaccines could be hurt by the same affliction that hobbled other measures to contain the pandemic. Only about 2.7 million Americans had been vaccinated by last night, New York time. That's a fraction of the 20 million the government hoped to have received shots by the end of 2020. Global news, 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Ritika, thank you so much. Now let's go straight to the markets, and they're ending a pretty tumultuous week, actually, or tumultuous year on a quiet note. Now, this is what I'm looking at in the markets. If you look at European futures, but in general, global stock indices actually holding near record highs, the dollar at the lowest in 2 years. I'm also looking at a couple of other things. Now, trading in the Euro Stock 600, almost 80%, below the 30-day average, just because many people are off on holiday. I'm also looking at the offshore yuan strengthening to the highest since June 2018. Now, a couple of other things we should be watching out for is, of course, Bitcoin and pound. Now, the frenzy in cryptocurrencies seem to be showing no signs of slowing down. Bitcoin actually vaulted at some point above 29,000 before pulling back to 28,825, and the digital asset has advanced almost 50% in December. I believe it's still on track for the biggest monthly gain since May 2019. And then I also wanted to show you what the pound was doing, simply because we have a Brexit deal, and from tomorrow the UK is officially out of the EU. Now, joining us to talk about a number of things is Patrick Armstrong, his Plurimi Wealth Chief Investment Officer. Patrick, first of all, Happy New Year. I don't know what you'll be, or how you'll be celebrating, or what's the thing that you'll want to own in 2021. But do you worry that markets are ahead of themselves?
It's something I think about every day, because you can't help but think it. When you look at valuations, extremely stretched on earnings, EBITDA, sales, MSCI World's at 100th percentile in all those measures right now. And if you look at interest rates, they've never been lower. You've got $18 trillion in negative yielding debt around the globe right now. So it's a point where things are very highly valued, definitely. I actually think that continues, though. I think the path of least resistance, given all the liquidity out there, is that things continue to move higher. because there are no alternatives, and central bank policy is really pushing you to take risk if you have any hope to preserve your purchasing power, because with the monetary bases growing the way they are, you do have to put capital to work. You can't keep negative real yields everywhere, negative nominal yields in Europe. Those are punishing to keep assets in cash.
Patrick, I love your festive background, but when we see a correction, where do we see it first?
I think it's going to be any questions about the resolve of central banks to continue to let the economy, or if they show hints that they won't let the economy run hot when it gets there. So Jerome Powell unequivocally has said that we're not even thinking about raising interest rates when the economy starts to run hot. That's not necessarily a sign that we have to start hiking. If there's any wavering on that, my base case, and I think the whole market's base case, will start to get questioned. And we may get into a scenario like we had at the end of 2018, where the Fed was starting to push up interest rates, where there were real yields all of a sudden on cash. The market's not ready for that. So higher interest rates, probably provoked by people not feeling as comfortable that the Fed will keep interest rates at zero forever.
But would that be coupled with inflation, or would that be because inflationary pressures are on the upside?
Exactly. I can't see the Fed pivoting to anything even remotely hawkish in 2021, but showing signs that there are inflation, and even Powell saying we're aware of inflation, we'll act prudently, things like that. Things like that can spook the market, because if you look at the Fed dot plot, we've got zero interest rates for years to come. If we do have the reflationary backdrop that probably is building a little bit as the economy reopens in the second half, there's a ton of savings, actually. Aggregate savings are higher now this year than they were coming into the year. There is pent-up demand. There could be some inflationary pressures. We've got higher cost structures now. Commodity prices are back very strong again. We've got Brexit, and there'll be tariffs, things like that. So you can make a case that there will be some form of simmering slow inflation, I think, in 2021. It won't be anything that provokes the Fed, I don't think, but any change in their language with a market that's completely driven by liquidity is a risk for assets at these valuations.
Patrick, given the extra restrictions and lockdowns, the small clusters that we're seeing, but that we were not seeing before in Beijing and parts of Australia, what kind of recovery will we see?
It's reliant on the vaccines, and basically there's two risks with the vaccines. It's about the logistics, about getting them distributed and getting them administered. And I suppose there's a reticence in some parts of the population about taking the vaccine. So you need the logistics to work, and you need a population willing to get vaccinated. And our base case is that happens. We do get towards the herd immunity by the summer. The economies reopen, and then the pent-up spending happens. So that'll be a very strong second half. But anything that doesn't allow that to happen creates significant risks, obviously.
All right, Patrick, thank you so much. Patrick Armstrong there of Plurimi Wealth stays with us, so we'll have plenty more, of course, with Patrick. We'll talk about Bitcoin and maybe gold as well. And also coming up, Karen Pierce, UK ambassador to the US. We'll talk about Brexit. We'll talk about Joe Biden as president come January 20th. That's at 6:30 a.m. in New York, 11:30 a.m. in London, and this is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that
both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Tom Keane off today. Now, the EU and China have sealed their alongside investment deal to expand opportunities in both regions. The agreement aims primarily to expand access to the Chinese market for foreign investors. The president of the EU Chamber of Commerce in China spoke about the deal earlier on Bloomberg.
We're very happy about the fact that, they stopped talking and now we can walk. The other thing is that, of course, we have to look into the details. There are some areas where we see improvements in real estate and finance, insurance. We see new energy vehicles, more independence for European business. But again, this deal will be hashed out vetted by the lawyers over 2021. And then we have to get this deal past the European Parliament. That's another body that will look into the content of this. But business is happy that this is concluded.
Okay, and you touched on some of the sectors that will be impacted there. Can you give us a sense of which businesses you think will benefit the most?
I guess it's the service sector. I mean, manufacturing does quite well in China. You can see with the cars, chemicals, machine building, that actually is all over the place. Services have been very constrained in healthcare as well as domestic transportation, again, in real estate and in education and so forth. Now, again, we have to wait for the details, but the indicators that we got from the European Commission point that we definitely have a door open where we all of a sudden can do stuff that we were not able to do in the past.
I know it's early days and you're still wanting and keen to go through the details of the deal, of course. Do you have a sense of the shortcomings, though, at this point of this agreement?
No deal is perfect. I guess that the shortcomings are possibly still, we have a negative list, something that we always resented. We have no negative list in Europe for Chinese business. We actually, from the legislation, we get told these areas you cannot invest. Now we have to see how that squares off with this deal, but still we have these constraints. And as you know, Tom, we have every year this position paper of the Chamber, solid 400 pages with more than 900 recommendations. We have to work through the details in order to see where we have real improvements. The shortcomings are possibly, when you look at the negotiation side that wanted to have a stronger sustainability basket, there has been some very soft language on forced labor, on ILO ratification and so forth. So the soft part of that could actually be challenged by the European Parliament in the second part of 2021.
Do you think it gets passed ultimately by the European Parliament?
Well, I guess I hope it will be passed. I mean, business really can't wait forever. This is something where we have done the first step. It's in the right direction. Of course, I know the concerns by parliamentarians about the human rights situation in China. That will not go away anytime soon. So in a way, I really hope that our parliamentarians are pragmatic and actually pass this deal through the system in order for us to implement more jobs in Europe and get more business done with China. After all, China stands for 30% of global growth over the next 10 years. So we really want to be part of that. And the deal opens the door for at least some of the stuff that we couldn't do now.
You touched on the question of human rights. And of course, that has been a criticism from some members of Parliament in Brussels, members of the European Parliament. I guess the question for some will be, should the Europeans be striking a trade deal, an investment deal with China, with a country that is jailing journalists, that according to the United Nations has as many as 1 million people held in camps in Xinjiang, that is involved and engaged in what the Canadians call hostage diplomacy?
You know, this is a system inherent, I would call it. As a European, of course, we cannot welcome this. We are having a very different system back home, and it is very unfortunate what's going on. At the same time, this is, again, a market access deal, and we have seen that Australia, Japan, Korea signed up to RCEP beginning of this month, and there were none of these sustainability baskets being mentioned. And phase one, US-China deal in January this year equally has much less language on forced labor in there than the Europeans. So in a way, European negotiators managed to push the envelope for the first time on this one. But again, I think they made it very clear, this is first step, this is market access. When it comes to these human rights issues, we really have to find a better toolbox.
Well, that was the president of the EU Chamber of Commerce in China speaking about the deal, speaking earlier on Bloomberg. Let's get back to Patrick Armstrong of Plurimi Wealth, where he's Chief Investment Officer. Patrick, I need to ask about Bitcoin. I know we've spoken in the past about cryptocurrencies. What happens to Bitcoin in 2021? Does it, has it finally grown up just because the type of investors that now want to buy Bitcoin?
Growing up, that's probably a good question. It does seem to be that there's more infrastructure around it now. I think it's probably about 12 months now that there's been a contract, a futures exchange on it. You've seen a bit of institutional interest that have grabbed the headlines that some institutions are allocating to Bitcoin now. If it is a currency, is it a store of value, medium of exchange, unit of account? Those are the things what you measure a currency by. Store of value, people are attracted to that there's a fixed number of Bitcoin and they know exactly what that'll be. To transact with it, it's still very cumbersome, but gold, you can make that argument as well. You can't really transact in gold that effectively. The regulation is the big risk for Bitcoin. I think probably with zero interest rates and record high valuations in other asset classes, you can see why there is attraction to Bitcoin. But it could be a house of cards that regulators could bring down. If you've seen what's happened to the price of Ripple, which is the third biggest crypto, or it was the third biggest crypto, maybe it's fourth now by market cap. That's fallen by about 60%, and it's because the regulators are starting to take a dim view on if some of these coins and tokens were viewed as security transactions, things like that. So regulators still have a lot of power, and they can determine how Bitcoin ends. And if you are owning Bitcoin, that's a risk you're taking.
Patrick, would you buy gold into 2021 or any Bitcoin?
We own gold. We own gold all of 2020 as well. We actually cut our position in half. We still own gold. Our view when we did cut it was that the cyclical backdrop was improving, and you may start to see higher 10-year yields. So negative real yields are the drivers of everything. Unfortunately, it's hard to have a diversified portfolio because negative real yields are what's pushing tech stocks, Bitcoin, and gold. We're still attracted to gold. If you look at the monetary aggregates, the G7's growing money supply at 18%. The US is growing M2 by 25% just in 2020. So there is a record amount of money being printed. Gold, like Bitcoin, it's not a fixed amount necessarily, but it's getting harder and harder to find gold. And over the next 3 years, it's the amount of reserves are going to be produced. So it's something I like to have in a portfolio as a store of value.
Patrick, is there anything else that, if you look away from gold, that's a haven? I don't know if it's currencies or what kind of role currencies will play in 2021 if we see turbulent times.
Turbulent times. I think the consensus view is that we're going to have a weakening dollar based on stimulus, based on zero interest rates, and the twin deficits. If we do see any risk in markets, the dollar always gets a safe haven bid. So I think a lot of the trades that people have on the consensus views are carry trades. They're going long emerging markets, going long risk, shorting dollar. The dollar still is a safe haven currency. So I think that's a risk. We think the dollar will weaken in 2021 because of our constructive outlook on the second half growth. But all those trades are incredibly correlated, and a strong dollar brings down most risk assets.
Patrick, if there's something that you were to play now that's a little bit left field for 2021, so you say a rise in inflation or a change in monetary policy is the biggest unknown. Is there anything in geopolitics that could impact some of the asset classes that you're invested in?
There are risks to the upside and downside that I think, even though people are generally optimistic, there are scenarios that are very plausible of a roaring 20s is the analogy some people are making, that people just after being locked down for most of 2020 really go on a euphoric spending spree and entertainment and those kind of things that could lead to huge consumer spending. So I think there's upside risks. We talked about some of the downside risks as well. But I actually do think we get to somewhat normal in the second half of 2021. We've got portfolios of equities that I find attractively valued. Companies like Novo Nordisk. Obesity is being sort of not in the headlines, but it's a huge problem in America. Once we get past the virus, I think people are going to have to start to deal with diabetes, obesity, and I think Novo Nordisk is the best play on that. And that's my favorite pick going into 2021.
Interesting. Patrick, thank you so much for all of the insight. Patrick Armstrong there of Plurimi Wealth joining us this morning. Of course, Patrick, Happy New Year. I hope you celebrate in style this evening after a difficult 2020. Now, coming up in the next hour, we speak with Luigi Zingalis, University of Chicago Booth School finance professor. That's at 6 a.m. in New York, 11 a.m. in London, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Ritika Gupta with the Bloomberg Business Flash. ExxonMobil is indicating it has suffered a fourth straight quarterly loss. The energy company confirmed in a filing it will take a write-down of as much as $20 billion on its upstream assets. Exxon also reported much smaller non-cash impairments related to its refining business. The company has been hurt by plunging demand during the pandemic, and it's struggling to maintain a $15 billion a year dividend program. No sign of an end to Bitcoin's red-hot December rally. It set another record today. The largest cryptocurrency surged past $29,000. Bitcoin has risen almost 50% this month and is up roughly 300% for the year. And the maker of Nordic track treadmills, stationary bikes and software reportedly is going public. According to Business Insider, Icon Health and Fitness has asked banks to pitch for roles in an IPO set for next year. Connected fitness companies have thrived during the pandemic. Icon has 700,000 subscribers to its iFit service. And that's the Bloomberg Business Flash. Francine.
Thank you so much, Ritika. Now, a lot going on in the markets, or I would say a quiet day to the markets after a pretty tumultuous year we've had. But we're still seeing records across stock markets. Bitcoin surging past 29,000 and then just below 29,000. Still a big psychological level. Pound 136.74. Tomorrow, it's the first day the UK, after the referendum 4 days ago, leaves the EU. Up next, we speak about Brexit with Paul Hunter, professor at East Anglia. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Give
give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
A second person has died in central China after being infected with a new SARS-like virus.
Our top stories this Thursday. China bans travel from the coronavirus epicenter with at least 17 dead and hundreds infected.
We now have a name for the disease, and it is COVID-19.
We're seeing fresh cases out of the U.S., Germany, France, Iran.
With the Dow Industrial set to record its worst drop since 1987, the VIX, which is now the highest going back since 2008.
Governments and all other policy institutions are called upon to take timely and targeted actions to address the public health challenge of containing the spread of the coronavirus.
We're looking at sending checks to Americans immediately.
The United States is working with our friends and partners around the world to stop the spread of the virus.
There's definitely some fear and uncertainty in the market, especially if you look at what happened overnight with the U.S. overtaking China as the #1 place with the most confirmed cases of coronavirus.
I've developed mild symptoms of the coronavirus.
This is a crisis like no other. It's worse since the Great Depression.
Global deaths from the coronavirus have now surpassed 500,000.
The global death toll, it hits 1 million.
President Trump has tested positive for coronavirus.
I learned a lot about COVID. I learned it by really going to school.
We are all in this together.
COVID cases are surging across Europe.
The UK is forecast to borrow a total of £394 billion this year, equivalent to 19% of GDP.
It's amazing to see the vaccine coming out. It's amazing to see this tremendous shot in the arm for the entire nation, but we can't afford to relax now.
I look back on the way that coronavirus pandemic has dominated 2020. I have to say, the drama of it cannot be underestimated. Now, joining us is Paul Hunter, University of East Anglia professor in medicine. Professor Hunter, thank you for joining us. How much do you worry about the new strain? And is that overshadowing the positive news we have the vaccines?
Yes, I mean, it is a dreadful new development, this new variant, for a whole variety of reasons. We saw in November that although the lockdown that we had in England was very effective at putting all the other variants into retreat, this one variant was still managing to increase substantially during a period of national lockdown. And that bodes very poorly for the future. And it is doubtful whether the tier 4 systems that we're actually now most of us living in will themselves be sufficient to control the spread of this new variant. And and hopefully we will have a lot of people vaccinated in the very near future, and that will actually reduce the death rates. But we're still a long way before out of the woods. The World Health Organization senior chief scientist in the last couple of days pointed out that we don't know that the vaccines actually stop transmission of the infection, and if that is the case, then this whole concept of herd immunity might not be valid, and that people who choose not to have the vaccine can no longer rely on the protection from everybody around them being vaccinated. So it is very, very concerning.
Professor Hunter, I have to say, I remember every time I interview you, one interview we had back in February, and you were the first one to tell us that this pandemic, or at the time was just a disease that had started in China, was coming our way. Why has it been since so difficult to model? Why is it difficult to understand the pattern of this thing that means that, for example, the government here in the UK says, look, it's fine to have Christmas, but then we're in a severe lockdown 3 days afterwards?
Yeah, well, I think the Christmas issue was a bit of a side issue, to be honest, because I don't think many of us didn't think that Christmas was going to be that much of a problem. The issue, though, is that this new variant has really thrown everything, all our predictions and all our expectations out of the window, because it is just so much more infectious. And that is the problem. And that means that it is almost certainly going to continue to increase, and the pressures on our health services, not just in England, but in many countries around the world now. This new variant has now appeared in the US, Canada, Denmark, many European countries, Australia, Japan. So this is a global threat from this new variant.
But does it mean that the social distancing needs to change, or that the rules that we've been told so far that keeps us safe, once we go back a bit back to normal, need to change because this variant is so much more aggressive?
Well, yeah, the issue is, what do we change them into? And Tier 4 in England is pretty much like lockdown, with the exception of schools being back, ultimately schools being able to go back. So it's difficult to know what more we can do. Yes, we have to continue doing that to protect ourselves, especially if we're in a vulnerable age group or have pre-existing disease, but also to try and actually reduce the increase. It's doubtful, and I hope I'm wrong on this, but it's doubtful, looking at the data, that we will actually see a reversal in this increase, even within Tier 4 systems. I hope I'm wrong. But we've still got to do that, because we've got to try and minimize the number of people who get this infection before they have had the vaccine.
How much protection does one get once you have the first dose of the vaccine?
Yeah, it's a little uncertain, but I think it is certainly the case. The Pfizer vaccine seems to be providing pretty good protection after about 12 days. The Oxford AstraZeneca vaccine, people are talking about reasonably good protection after about 21 days. But certainly it is not absolute. But when you're looking at the risk to the population as a whole, I think the decision to extend the time periods between the first and second dose is actually a really good one, and one that will undoubtedly, in my view at least, save a lot of lives. And in fact, the evidence from the Oxford AstraZeneca vaccine is that if you stretch out the time between the first and the second dose, you actually get a slightly better overall response to the vaccine. So it does make good sense. And as I said, it is probably one of the things that we can do to ultimately reduce cases and deaths.
Professor, thank you so much. Paul Hunter there from University of East Anglia, of course, on COVID-19 and the vaccine. Now let's get straight to the Bloomberg First World News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Senate Majority Leader Mitch McConnell has ruled out passing the House bill that would give most Americans $2,000 payments. McConnell says the measure has no realistic path to quick passage in the Senate. Instead, the Senate will work on combining the payments with legislation on election integrity and rolling back social media liability protections. The Senate is closing in on a vote to override President Trump's veto of the $740 billion defense bill. It's a battle with the White House that may not end until the final hours before a new Congress begins on Sunday. The House has already voted to override the veto, and senators are expected to follow suit. The Trump administration has ramped up its latest trade fight. It's announced additional tariffs on some products from the European Union as part of a dispute over subsidies to aircraft makers Boeing and Airbus. In November, the EU imposed duties on some $4 billion in American-made products. The new U.S. tariffs involve aircraft parts and certain wines and brandies from France and Germany. China has now approved the country's first vaccine for the coronavirus for general public use. The shot is made by state-backed developer China National Biotech.
We'll continue to speed up the vaccine R&D and will not relax for at least one moment. First, we'll speed up the phase 3 trials and provide more vaccine products on different technological platforms. Second, pay close attention to various mutations around the world and respond scientifically to ensure that vaccine use is not affected. Third, we'll continue to intensify basic research on vaccines and provide solid scientific and technological support for national COVID-19 response.
Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Ritika, thanks so much. Now, coming up, Aisha Langford, assistant professor at NYU's School of Medicine. We continue tracking the pandemic and tracking COVID-19. That interview, 6:30 a.m. in New York, 11:30 a.m. in London. And this is Bloomberg.
David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Tom Keane off today. Now, millions of people in England will wake up to tougher restrictions after the government moved most of the country into Tier 4 lockdowns amid the report of this virus variant. At the same time, UK regulators have now approved the Oxford University AstraZeneca vaccine for use. Now, it is expected to start rolling out next week, and we spoke to the UK's COVID vaccine deployment minister. Here he is.
We begun vaccinations on the 8th of December with the Pfizer-BioNTech vaccine, and we've to date vaccinated over 600,000 of the most vulnerable people in the United Kingdom to the COVID-19 virus. And we will continue now with both vaccines, both Pfizer and with the new Oxford AstraZeneca approval. Today we'll start vaccinating with that vaccine as of Monday. And the only limitation is the ability of both manufacturers to deliver vaccine doses to us. We've got 530,000 doses of the AstraZeneca for first week of, or from the 4th of January for that first week. And then we continue to increase those numbers. It's really dependent on how quickly we can vaccinate through the 9 categories that the Joint Committee on Vaccination and Immunization have set us so that we can protect the most vulnerable. The good news today from the regulator is that the time period between doses for both vaccines, we've got 12 weeks, which we plan to do so as of the 4th of January, and therefore vaccinate many, many more people much more quickly and get to a place where we can begin to take away some of these non-pharmaceutical interventions, as they're called.
Mr. Sahawi, this is Emma Chandra here, also in London. You mentioned there, of course, that you have 500,000 doses. You're awaiting then this ramp up to be getting more doses. The Health Secretary saying today that we should be getting millions more from the beginning of February. Firstly, do you anticipate that we could be waiting a long time for some of those vaccinations through the end of January? And secondly, do you have a target number of people who need to be vaccinated in the UK in order to lift some of these Tier 4 and Tier 3 restrictions?
So Public Health England is looking at that inflection point, as Prime Minister Boris Johnson refers to it, between when we protect those 9 categories with the over 80s and the other groups, and obviously our national health workers and care home workers as well, and where we see community spread begins to slow down. At the moment, this new variant is clearly on the rise in London and in the southeast of the UK, and we're beginning to see it begin to rise as well in other parts of the country, like the Midlands, hence why the decision was taken today. But of course, the quicker we can vaccinate people, and if you take the 9 categories, we're talking about 26 million people that we would need to vaccinate in those 9 categories, which would eliminate 99% of the mortality, of the deaths from COVID.
So, excuse me for interrupting you. When do you expect to get to that 26 million? When can we expect you get to that key number of 26 million people vaccinated?
So we've put in place an infrastructure in NHS England, in Wales, Scotland and Northern Ireland that can deliver, as the CEO of AstraZeneca said today, they can potentially manufacture 2 million doses a week. We have the infrastructure to deploy that. So at the moment, my I guess limitation is the speed at which we can get deliveries from both AstraZeneca and Pfizer, not the infrastructure. We are delivering through the hospitals, so all hospital hubs will be up and running. We will have which we already do, the GPs. This is the primary care networks in the UK. Of course, we're going to go into the vaccination centres, which we are launching as well, and pharmacies, both the community pharmacies and the independent sector. So we have a massive infrastructure in place that can deliver that 2 million doses a week and more.
Well, that was the UK Minister for COVID vaccine deployment, Nadim Zahawi, speaking to Bloomberg's Taylor Riggs and Emma Chandra. Now let's get straight to the Bloomberg Business Flash in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. In Hong Kong, the highest court has sent media mogul tycoon Jimmy Lai back to jail. He is awaiting trial for allegedly violating China's new national security law. The ruling reversed a lower court's decision to let Lai go free on bail, and it avoids a showdown with Beijing. Gold is headed for its best year in a decade. It's up more than 24% in 2020. Gold has benefited from the weaker US dollar and low real interest rates. And the Fed has indicated that rates will stay near zero through next year. And home buyers in the US are facing their worst affordability squeeze in 12 years. Buyers in the fourth quarter needed to spend almost 30% of the average wage to afford a typical house. Low borrowing costs have spurred a buying frenzy, and that's driven up prices. And that's a Bloomberg Business Flash. Francine.
Ritika, thank you so much. Now, coming up, we look at Brexit and the special relationship between the US and the UK with Karen Pierce, UK ambassador to the US. That interview, 6:30 a.m. in New York, 11:30 a.m. in London, and this is Bloomberg.
reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We are extremely bullish. Our confidence in it has gone up since 2017, because what we saw as it dropped from 20,000 to below 4,000, it actually got well into the threes, I think in 2019, was that Bitcoin's share of the crypto asset ecosystem moved from the low 30% range in terms of value, network values, into the low 70% range. And what did that tell us? That confirmed in our mind that Bitcoin is the reserve currency of the crypto asset ecosystem. So it is the reserve cryptocurrency, which is a very important role. It's the flight to safety currency. It is Bitcoin's technology, or Bitcoin's blockchain, is the most secure of any other blockchain. And so it makes sense that Bitcoin would be the reserve currency of the crypto asset ecosystem.
Kathy Wood there of ARK Investments, emerging as one of the top stock pickers around by focusing on innovators in DNA development who are rescuing the world from the global pandemic. Well, I'm delighted to be joined this December 31st by Matthew Winkler, our Bloomberg News Editor-in-Chief Emeritus, who just wrote a great piece also on Kathy Wood and what her findings teach us maybe for the next year. Matt, as always, thank you so much for giving us a little bit of your time. Why did you decide for the last story of 2020 to focus on Kathy Wood?
Well, it's something actually, and it's great to be with you, Francine. It's something that we've been doing now going on 6 years. Every year we look at Bloomberg Opinion, who's the best stock picker according to data compiled by Bloomberg. Sometimes it takes us a little bit longer than the last week of the year to determine that because it's a close call. That was not the case this year. Kathy Wood was far out in front. In fact, so far out in front, she has the top 3 funds. I haven't seen that before. There are 367 U.S.-based mutual funds with 60% of their $5 billion or more in American equities. And number 1, number 2, and number 3 are hers. And they are all about, interestingly enough, DNA disruption. Central bankers have been very kind to the equity market this year. We've noted that. You've noted that many times. And fiscal policy has been pretty good, too. But what she has done has actually seized on the disruptors that are definitely having an impact and dealing directly with the coronavirus. And that's where the DNA comes from. And she does not have a close competitor. They're, 50 points behind her. And just to put it in perspective, she has delivered a total return, which is income plus appreciation. That's 11 times the gain for the S&P 500, 19 times the average of the equity exchange traded funds that we look at, 17 times the advance of healthcare benchmark, and 5 times the similar measure for technology. So she is right now in a category that she owns. Nobody is approaching her. So what is going on with her? So
Matt,
Go ahead.
Yeah, how exactly did she do it, right? Because unlike most of her competitors who rely on market benchmarks, she chooses the size of her weightings. How did she pick these companies? How did she just do so phenomenally well?
Well, let's take one of the funds, the ARK Genomic Revolution Fund that she runs. And it appreciated a combined, the companies in that fund, the top 5, appreciated a combined 430%. What are they? There's Arcturus Therapeutics Holdings. This is a San Diego-based biotech that focuses on treatments for diseases, including the coronavirus. And it represents 4.7% of the fund. It returned 750% in 2020. Then, there's CRISPR Therapeutics, which is a Basel, Switzerland-based biotech maker of gene-based medicines. And That's 6.2% of the fund, and that returned 177%. Then there's Pacific Biosciences in California, which is in Menlo Park, and it's a diagnostics maker of inexpensive DNA sequencing. So you get the idea. These are not your household names. These are not companies that typically people talk about.
Thank you so much for joining us. Too short a time. Matt Winkler, there, Bloomberg News Editor-in-Chief Emeritus, with this new story out. Check it out. This is Bloomberg.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
China approves its first vaccine for general use. This as a second U.S. case of the UK's COVID-19 variant is detected, this time in California. Cutting it close, UK lawmakers approved the post-Brexit trade deal less than 24 hours before the end of the transition period. And blocked, Mitch McConnell dashes hopes for $2,000 stimulus payments. Stocks are poised to end 2020 at record highs. Well, good morning, everyone, and welcome to Bloomberg Surveillance. Of course, happy New Year's Eve, everyone. 2020 will have been certainly eventful. Some will want to forget it. Some may be fully invested in stocks. Will cheer it as an encouraging year. I'm Francine Lacqua here in London. I'll walk you through exactly what's been happening over the year that was and the next 12 months. Tom Keene is off. New Zealand, the first country to be part of 2021. Of course, usually a very important firework display in New Zealand.
I understand that despite the thousands of people in Victoria Street West in central Auckland watching the laser shows, listening to music and waiting for the fireworks display at midnight, which just rang moments ago, it's a bit more subdued than in previous years. Now, we did understand that music blasting around the Sky City on the entertainment center speakers, including some of the national anthem and other lead singers. This is, of course, joyous to see some of the celebrations out there, but a little bit more subdued than in the past. We'll see what celebrations look like in Europe and the US. Of course, we've had extra restrictions here in the UK. There will be a firework display, I understand, but people will only be able to see it from their homes. Happy New Year if you're watching us from that part of the world. And we hope 2021 will not only be prosperous, but keep your loved ones and family safe. Now let's get straight to the Bloomberg First World News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine, and happy New Year's Eve. Mitch McConnell has made it clear the direct payments in the stimulus package will not be increased to $2,000. The Senate Majority Leader says a House bill that would do that has no realistic path to quick passage in the Senate. The larger payments are backed by Democrats and President Trump, but McConnell says the House legislation falls short of what the president wants. The British Parliament approved Prime Minister Boris Johnson's post-Brexit deal in less than 24 hours to spare. Britain formally leaves the European Union's single market tonight. The rush to get the deal through Parliament in a single day ends the 4-year saga that gripped British politics and divided the country. And a British judge will rule Monday whether WikiLeaks founder Julian Assange should be extradited to the US to face criminal charges. In recent weeks, there's been talk that President Trump might pardon Assange. He's accused of working with former soldier Chelsea Manning to get classified documents. But the president praised Assange during the 2016 campaign when WikiLeaks released emails that hurt Hillary Clinton's campaign. And US health officials admit that the coronavirus immunization program is off to a slow start. That raises a prospect that the all-in bet on vaccines could be hurt by the same affliction that hobbled other measures to contain the pandemic. Only about 2.7 million Americans had been vaccinated by last night, New York time. That's just a fraction of the 20 million the government hoped to have received shots by the end of 2020. Global news, 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Ritika, thank you so much. Happy December 31st. If you look at the markets, it's been a pretty tumultuous year, but actually we're also ending on a quiet note today. Now, if you look at global stock indices, this 31st of December, they're holding near record highs, the dollar at the lowest in 2 years. I was also looking earlier at China's benchmark index, closing at a 5-year high. Officials giving the green light to its first coronavirus vaccine there for general public use. Data also seems to be showing in China steady economic recovery. I'm looking also at offshore yuan, strengthening to the highest since June 2018. And then two other things that we've been watching, of course, all year. One is pound, the other Bitcoin. Now, the frenzy in cryptocurrencies shows no sign of slowing down. Bitcoin vaulted above $29,000 before pulling back to about $28,800. The digital asset has now advancing almost 50% in December alone, on track for the biggest monthly gain since May 2019. And then look at sterling, 136.65 from tomorrow, January the 1st. The UK will have exited the EU. Now, the U.S. election was a defining moment, of course, of 2020, with Joe Biden and Donald Trump receiving the most votes ever for a challenger and an incumbent president. From nominations to debates to Joe Biden's victory, let's take a look back at our coverage.
I accept this nomination for President of the United States of America.
My fellow Americans, tonight, with a heart full of gratitude and boundless optimism, I profoundly accept this nomination for President of the United States.
Everybody knows he's a liar.
But you
I just want to make sure.
Joe, you're the liar.
I want to make sure.
You graduated last in your class, not first in your class.
You're the worst president America has ever had.
Hey,
Come
Joe,
on.
I wear masks when needed. When needed, I wear masks.
Okay, let me ask.
I don't wear masks like him. Every time you see him, he's got a mask. He could be speaking 200 feet away from it, he shows up with the biggest mask I've ever seen.
What is the Trump health care plan?
Well, first of all, I guess I'm debating you, not him, but that's okay. I'm not surprised.
The question
Supreme
is,
Court Justice, radical left.
Will you shut up, man?
Listen, who is...
And we have some breaking news at the top of the hour. President Trump has tested positive for coronavirus. U.S. futures take a leg lower.
I spent 4 days there and didn't have to. I could have stayed at the White House, but the doctor said, because you're president, let's do it. I said, fine. You tell me what to do, and I'm going to listen. We will win this, and as far as I'm concerned, we already have won it.
I'm here to tell you tonight, we believe we're on track to win this election.
I want to take a look at what's going on in terms of the election map. Where we stand right now on the electoral map, Biden 264 versus President Donald Trump 214. Remember, the key number is 270.
The Associated Press plus NBC and CNN and others now have projected Joe Biden.
The people of this nation have spoken. They've delivered us a clear victory, a convincing victory. A victory for we the people.
A snapshot there of the 2020 election. It does not, of course, stop there. With the Georgia Senate runoff elections quickly approaching, there is still much on the line for the makeup of Joe Biden's political landscape. Now, joining us for more is Emily Wilkins, Bloomberg government congressional reporter who I believe will travel to Georgia next week. Emily, good morning to you. What are you expecting in Georgia?
So, Georgia, we are expecting a very, very close race between the Democrats and Republicans. Georgia has kind of temporarily become the new center of the political world for a little bit because it's this race that's going to determine whether Democrats or Republicans control the Senate for the first 2 years of Joe Biden's first term. This is going to obviously be huge for whether or not Biden can get key parts of his agenda done. And at this point, we are expecting a close race. We might not know the results. This should be familiar to everyone. We might not know the results on election night. That's Tuesday, January 5th. It might take a couple days for us to officially have a winner declared in a race that's expected to be this tight.
Emily, why is it so close?
A couple different reasons. I mean, number one, simply the makeup of Georgia has it pretty close. If you remember the presidential election, it took the networks about 10 days to call it. Biden wound up winning by only a couple of tens of thousands of votes. It was just a part of the makeup of Georgia. It has a little bit more of a swing state than what we've seen in the past. And this is just a big election. A lot of people understand that this is for control of the Senate. It's mobilizing a lot of people on both sides.
Emily, when you look at some of the issues at hand, have people made up their mind? Are there undecided voters? Is it really, is there mail-in voters? Like, how different is this from the presidential election?
So with the runoff elections, it's always a little bit different because special elections in general, anything kind of held outside that May, November every 2 years, usually parties want to play to their core base. And it's really a game of less convincing people to vote for them and more of a game of convincing their core supporters to turn out. Now, Republicans kind of have this on lock. They've traditionally been very, very good at this. But Democrats saw a number of voters turn out for them that really hadn't turned out before, that haven't been mobilized until the last couple of years. I'm thinking Hispanic populations, Asian populations, even some Black populations and communities in Georgia. We really saw them turn out in big numbers that we haven't necessarily seen before in November. The question is, can they do it again? There's a lot of political exhaustion down in Georgia right now. And so the parties are working as hard as they can to really communicate to people what is on the line and how important it is for them to turn out on Tuesday.
If you look at the stimulus conversations and the stimulus checks, does that play out significantly, or are people thinking about other things to decide who they vote for and whether they show up to vote?
I think it does to a certain extent. And you really saw that when Trump initially called for the $2,000 stimulus checks rather than the $600 ones. You saw both Democrats jump on that immediately, say that they supported the president in that regard, not something you normally hear from the Democrats. But they saw that the $2,000 checks, they thought it would be something that would be politically popular, and they wanted to show that they would back it. And then this week, you saw both Republican candidates come out and also support those checks. So it seems like in the mindset of all of the candidates, these $2,000 checks will be popular among people, even though realistically up in Washington, they've been declared all but dead by Senate Majority Leader Mitch McConnell.
Emily, thank you so much for joining us. Emily Wilkins there, Bloomberg government congressional reporter. Now we'll have plenty more, of course, on this. We'll have plenty more on the U.S. Senate race in Georgia. We'll also have plenty more on Brexit and the special relationship between the UK and the U.S. Coming up, Karen Pierce, the UK ambassador to the U.S. That interview at 6:30 a.m. in New York, 11:30 a.m. in London. And this is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Tom Keane off today, preparing for the big celebrations this evening. Now, joining us is Luigi Dingales, finance professor at the University of Chicago Booth School of Business, to get us started right for 2021. Luigi, as always, thank you so much for joining us. We usually need to talk to you for about 3 hours, from anything from economic theory to Brexit and Europe. But the hardest, I guess, question is what will the economy look like post-pandemic? Are we doing too much damage with some of the central bank measures, or can we really rebuild better for longer?
So I think that the shape of the economy depends, again, on how fast the vaccine is going to be deployed. And hopefully, if this is fast enough, the economy will restart, I think, well. And what I expect is that there will be enormous gains in productivity due to the fact that people figure out new ways of doing things, which of course brings also the problem that there would be probably a lot of unemployment at the bottom of the income distribution. And so we need to think about how to help those people transition, and what kind of new jobs can we offer for them.
Okay, who's in a better place to actually deal with that? If you look at the U.S., if you look at the stimulus package that we've had so far, and this transition towards a new economy, how many people will be left behind, and will we start seeing that legacy in 2021?
I think we'll certainly start to see that legacy in 2021. I think that the United States have not done enough to think about how to address the problem. I don't think any other countries have done that either. But in the United States, things happens faster. So I think the new Biden administration should have to deal with that right away.
What do you think should be on the priority for the Biden administration? I mean, we know it's climate change. Maybe it's, kind of closing the wealth gap. But what does he need to tackle that we haven't discussed yet?
I think that some infrastructure work can be helpful. I think that the infrastructure in the United States is far from perfect. Let's use a British understatement. And so it needs some work. And that's an easy way to create jobs that anybody can do. And so I think to suck up part of the unemployment that we're going to see at the end of it. And the second part, which is less popular, but I think is important, is you should think seriously about how some antitrust intervention can create, can break up some of the big monopolies and create more competition that would mean also more jobs.
Luigi, does the obsession from the Republican Party in the U.S. about debt creation, need to stop? And if it doesn't stop, is there a worry that the U.S. will underperform other parts of the world?
So depends on what you mean with the obsession. I think that it's important to remember we have a budget constraint. It's also important to remember that when interest rates are so low, this budget constraint is much less binding than in other moments. So is this a moment to spend in investments? Absolutely, because if they are good investments, they really pay for themselves when interest rate is close to zero. Now, does it mean that money grows on trees and we can hand out money to everybody without any concern? The answer is no. So I think that one needs to be careful in not going to either extreme. But I think that there is a room for reasoning, and I think that's the room that we should push and trying to find good use of money, and hopefully everybody can be brought along.
Luigi, what happens to Europe next year? Does it fall behind, or does it actually accelerate as long as a recovery money fund is spent wisely?
First of all, the fear is that the recovery fund will arrive late to the game. And so I think that is going to be a problem, especially in countries that were weak to begin with. And one has the name that we both know because we both come from that country. I think that Italy is definitely a weak link in the European system, has been for many, many years, and it doesn't seem to get better. So I think that will Germany recover? Yes. Will Italy recover? Yes, but at a much slower pace. And I think that's a problem, especially because even if the recovery fund works, is peanuts by respect to what we observe in the United States. So I think that the federal institutions in Europe are still very weak, and as a result, it's very difficult for the continent to restart at the same pace as the United States.
But Luigi, how will Europe fare, A, without the UK, because tomorrow, of course, is officially the day one of Brexit, and without Chancellor Merkel, given we have elections towards the end of the year?
I think that paradoxically, without the UK is going to work a little bit better, maybe in the wrong direction. I like the role that the UK were playing in Europe, but without that role, I think it's easier to get some form of action. I think that the recovery fund will be more difficult, probably at the UK being still part of Europe. I think Angela Merkel was playing an important role, but was not an activist in any front on that. In a sense, the secret of Angela Merkel is that she was able to see the writing on the wall at the last minute and act at the last minute when it was just before it was too late. But I don't think early enough to eliminate the damage especially the damage that was suffered by periphery countries. In a sense, when Germany was involved, she was always very prompt at acting. But when other countries were involved, she was acting late. So will the future be worse without Angela Merkel? I don't know. We'll see who will substitute her. But it is true that the European Union is incredibly dependent on Germany. I think there is a German hegemony in the running, and so we all depend very strongly on who is the chancellor in Germany.
Luigi, thank you so much. As always, Luigi Zingalis there of University of Chicago Booth School of Business. And of course, Happy New Year. And I hope you're wearing red, as all Italians should, on this day, December 31st. Now, this is Bloomberg. We'll have plenty more on the markets. We'll look at politics. And of course, we look ahead to the new year.
Se logra una sonrisa de parte de cada persona que utiliza el dispositivo, ya que se pone en situación, entre comillas, de una persona discapacitada. Y ven que lo sorteamos de una forma agradable, porque el simple hecho de sentarse en un dispositivo ya es agradable.
Nace MAT como una solución de movilidad a personas con discapacidad, nace Mandados como una opción de generación de ingresos y nace MAT Tools como generación de ingresos y educación a las demás personas que no están en silla.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. ExxonMobil is indicating it has suffered a fourth straight quarterly loss. The energy company confirmed in a filing it will take a write-down of as much as $20 billion on its upstream assets. Exxon also reported much smaller non-cash impairments related to its refining business. The company has been hurt by plunging demand during the pandemic, and it's struggling to maintain a $15 billion a year dividend program. No sign of an end to Bitcoin's red-hot December rally. It set another record today. The largest cryptocurrency surged past $29,000. Bitcoin has risen almost 50% this month and is up roughly 300% for the year. And the maker of Nordic Track treadmill, stationary bikes and software reportedly is going public. According to Business Insider, Icon Health and Fitness has asked banks to pitch for roles in an IPO set for next year. Connected fitness companies have thrived during the pandemic. Icon has 700,000 subscribers to its iFit service. And that's the Bloomberg Business Flash. Francine.
Thank you so much, Ritika. Now, stocks are pretty much steady. In fact, markets are ending a pretty rough ride of the year on a quiet note. Global stock indices still close to record highs, in many cases in record highs. The dollar at the lowest in 2 years. I'm also looking at renminbi. If you look at offshore yuan, strengthening to the highest since June 2018. Again, overall, there seems to be a lot of buoyancy on China after officials there giving it the green light to its first coronavirus vaccine for the general public. Up next, we talk the US and the UK. We talk Brexit with Karen Pierce, a UK ambassador to the US. This is Bloomberg.
Chinese brands now account for 7 of the country's top 10 cosmetics lines, up from just 3 in 2017. That has pushed out foreign brands like L'Oreal's Maybelline, which has seen its share of China's makeup market plunge by half since 2010. For more, we're joined by Bloomberg editor Bruce Einhorn. Bruce, why the drop?
Chinese brands are becoming much more adept at reaching Chinese consumers, especially now at a time when more consumers are reluctant to go shopping outside. People are spending more time at home. People are spending more time on social media. Chinese brands are very good at using social media, using live streaming, using other things in order to market. Chinese brands also tend to be less expensive. And so at a time when the economy is struggling a bit, there's a lot of uncertainty, people are more budget conscious, Chinese brands have a bit more of an advantage.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It's officially called now. The numbers remain 48%, leave 52%.
The British people have made a very clear decision to take a different path.
Brexit means Brexit.
Brexit does mean Brexit.
Their proposal, the one the Prime Minister's put, is clearly dead.
For a new Prime Minister to lead.
After 3 years and 2 missed deadlines, we must leave the EU. It's far bigger than that. It's not just about some legal extrication. It is potentially a moment of real national renewal and change.
Boris Johnson is now headed down a path that will end in a very hard Brexit.
We need an urgent solution because the clock is ticking and time is running out.
The time for answers is quickly running out. We have no more time to lose. We must have a final agreement by the end of October.
My experience is sometimes in the last moment you will find a solution.
Honourable members, as I said, the next days are going to be decisive.
Looking at where we are, I do think it's vital that everybody now gets ready for that Australian option.
And as things stand, I cannot tell you whether there will be a deal or not.
We have completed the biggest trade deal yet, worth £660 billion a year, a comprehensive Canada-style free trade deal between the UK and the EU.
We can finally put Brexit behind us.
Well, that was a look back at 4.5 years of missed deadlines, fraught negotiations, and political upheaval in the UK regarding Brexit. Joining us now to talk about all of this and the future relationship with the US and the UK is Karen Pierce. She's UK ambassador to the US. Ambassador Pierce, thank you so much for giving us a bit of your precious time. Ambassador, when you look at what comes to in 2021, with President Trump now out of the White House, does it mean that it's less likely for the UK to get a quick deal with the US?
Well, I don't want to be presumptuous about the Biden administration's policies and priorities, but we believe this deal can be done. It can be done in 2021. That said, we don't want to set a hard deadline. Much more important to get a good deal with lots of good content. It is a good deal. It's a bespoke deal. It wouldn't take too much bandwidth to get it through Congress. And we'd be delighted to work with the Biden administration if there were particular angles. Some people have mentioned Labour, some people have mentioned climate, that they would like to see included. But it is an interesting deal. It's for the first time, I think, we'll have digital commerce as part of its content.
So, Ambassador, given where we are, what would be the UK priorities for a US deal, for a deal with the United States of America on trade?
Well, as I say, we've put a lot of effort into making this deal concentrate on digital commerce. That's the way of the future. We've also put a lot of effort into small and medium-sized enterprises. Both our countries depend very much on that type of business. But I think that sector is also pretty crucial for COVID recovery. And another reason to do the deal would, in fact, be that COVID recovery. We want to send an early signal in 2021 of our confidence in economic recovery across the globe, and particularly in the UK and the US.
Have you been talking to the Biden team already?
Not directly. The transition team have a dictum of one president at a time. They've made it very clear they don't want to talk to foreign governments, and of course we respect that. And for all the Americans who have been nominated for cabinet posts, they of course need Senate confirmation, and so we would not be able to talk to them, and that's fine. That's a standard way that American administrations operate. Instead, we've talked to a lot of people around the Biden team, and we talk a lot to people on the Hill of both parties. And we do find a lot, I find as I go on the Hill, I get a lot of support for a UK-US free trade deal. And also when I'm talking to governors around the country, there's a lot of interest. 33% of, I beg your pardon, 33 out of the 50 states have exports to the UK in their top 5 export markets. So there's a lot of interest in a deal with the UK.
Ambassador, I don't believe the Prime Minister Johnson has ever met Joe Biden. Are there any plans for an early meeting?
I don't think they have met, though the Prime Minister has met a number of Democratic contacts very close to the Biden team, part of the Biden team. And I think that includes, from memory, the incoming Secretary of State, Tony Blinken, if he gets Senate confirmation. But the Prime Minister and President-elect Biden did talk on the phone very soon after President-elect Biden declared victory. I think the Prime Minister was the first European leader to speak to the President-elect. They had a very warm conversation. They talked about a great many things, including the free trade deal. They talked about Northern Ireland and the importance of upholding the Good Friday Agreement in Northern Ireland, and they looked forward to working together on climate in particular and on COVID recovery. And the UK will take the G7 chair from the Americans in January, and COVID recovery is going to be at the heart of what we want to do, and we think that will chime well with President-elect Biden's priorities.
I don't know if you were on that call between the two leaders, but what was the chemistry like?
I wasn't on the call. This was handled directly between the two offices, but I have had a readout. I have talked to the Prime Minister. I think the chemistry was fine. Both of them are very affable people. They know the importance of personal relationships. They have a lot in common in terms of what they want to achieve in 2021. So I think the atmospherics were warm, they were friendly, and both of them agreed that there's a lot to do. We can do that together. Very important that we work closely together on climate. Very welcome that President-elect Biden has said he wants to bring America back into the Paris Agreement.
Ambassador Pierce, what do you see as the biggest hurdle or the biggest challenge for the UK-US special relationship?
I think the biggest challenge, to be honest, is making sure that we see the new challenges coming down the track in 2021 and beyond for what they are. And I think particularly of technology in this respect. I think we're now standing on the threshold of a major transformation in technology. I personally would liken it to the effect that nuclear had in the 1950s. And I think we're really going to have to get to grips with that, using all our innovation and science cooperation, charting a way to make sure that as we develop this new technology, it develops on lines that do justice to open societies and open markets. We don't want, for example, to wake up one day and find that there is Chinese standards on things like AI and cyber. That would be too authoritarian. We want to have an open model. And I think the second big challenge is the strategic competition from Russia and China, particularly China. We need to get that right again so that it's open societies that are seen to thrive and recover from the COVID pandemic.
And do you think the UK and the US will actually work hand in hand to tackle some of the challenges that you've just laid out?
Oh, definitely. I mean, there's a very deep, profound, successful relationship between the UK and US that has endured since the end of the Second World War, and in fact before that. And it doesn't depend on individual leaders on either side. And one of the layers of that bedrock, if you like, is science, it's innovation alongside the defense and military cooperation. But this is not an exclusive enterprise. There will be a lot of countries we want to work with, the great democracies of the world. We want to work with them to ensure that open societies recover from the pandemic and can go on to tackle some of these really big challenges.
Ambassador, maybe just as a final question, given we're towards the end, just 20 days really of the Trump administration, what do you think President Trump's greatest achievement has been?
I think the normalization of relations with Israel from some Arab countries, I think that will prove to be a very important step forward in the Middle East. It's a bit hard at the moment to say exactly how events will unfold, but I think it's a very important achievement, and we were happy to salute it at the time. It provides a basis on which to build to try and bring peace and stability to the Middle East. I think before COVID struck, President Trump had presided over a thriving economy. That's also something to look back on and think about how America can restore that level of economic dynamism after the pandemic. And I think what President Trump did on the opioid crisis was also very commendable.
All right, thank you so much for your time today, Ambassador Karen Pierce, UK Ambassador to the US, joining us to talk about a number of things, Brexit and the US and UK relationship forward. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Senate Majority Leader Mitch McConnell has ruled out passing the House bill that would give most Americans $2,000 payments. McConnell says the measure has no realistic path to quick passage in the Senate. Instead, the Senate will work on combining the payments with legislation on election integrity and rolling back social media liability protections. The Senate is closing in on a vote to override President Trump's veto of the $740 billion defense bill. It's a battle with the White House that may not end until the final hours before a new Congress begins on Sunday. The House has already voted to override the veto, and senators are expected to follow suit. And the Trump administration has ramped up its latest trade fight. It's announced additional tariffs on some products from the European Union as part of a dispute over subsidies to aircraft makers Boeing and Airbus. In November, the EU imposed duties on some $4 billion in American-made products. The new U.S. tariffs involve aircraft parts and certain wines and brandies from France and Germany. China has now approved the country's first coronavirus vaccine for general public use. The shot is made by state-backed developer China National Biotech.
We'll continue to speed up the vaccine R&D and will not relax for at least one moment. First, we'll speed up the phase 3 trials and provide more vaccine products on different technological platforms. Second, pay close attention to various mutations around the world and respond scientifically to ensure that vaccine use is not affected. Third, we'll continue to intensify basic research on vaccines and provide solid scientific and technological support for national COVID-19 response.
Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Ritika, thank you so much. Now, coming up, we speak oil with Francisco Blanch, Bank of America head of global commodities. That's at 7:30 a.m. in New York, 12:30 p.m. in London.